Hello, 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 everybody. Welcome to this exciting Palantir earnings call live stream. I have here with me Dominic Rinaldi,
Hey
one of
guys.
the best in the business. We'll showcase your work on Seeking Alpha in a second. And also, Greg from Investor is here to talk about the technicals and provide some contrary analysis. And we got some other guests popping in as we get closer to the earnings. Coach Strap will be here a little bit later on. Ticker symbol U might swing by for a few minutes. So we have an incredible show for you guys today. Thank you for joining us. As we let people in, I don't want to waste any time. And uh, First of all, just have to say a huge thanks for Oliver Queen for the $10 super chat. Oliver is saying, "Hello there, Tom. Few questions. What is your full name in Russian? I assume you was born there. And how many PLNTR stocks you have? I have none PLNTR stocks. Yeah, I have a few PLTR stocks. I need to catch up. So my full Russian name is none of your business, Pizdets. Pizdets is the last name. And I have not enough Palantir stocks. Thank you for the question, Oliver. I appreciate it. With that little fun chat, people might think it's rigged. I did it on purpose, but it was absolutely not planned. So I want to start the show today. We're already 1 minute into this, and I want to go straight into the hardcore question. As you guys can see on the screen, we are up 7.5% today, up 10% since Thursday. I'm going to ask the question first, Dom, and then Greg, I'm going to pass it off to you. So, Dom, in 2 minutes, do you think that we are in an overbought territory at this point, or do we still have ways to go?
From a technical perspective, I'll let Greg talk about it, but it looks overbought from a technical perspective. Do I think that we're going to go over higher through earnings? Yeah, I think we might even get to 30 if the results are over exceeding what the revisions of Wall Street were. Right, Wall Street actually revised up ahead of their guidance of Palantir's. So if they beat that and do some of the things that I think are possible, I think we could see 30, but of course we know as soon as it goes up, it's going to retrace right back down. I would say that maybe our new $24, $25 is what $20 was for us for the last 3 to 4 months.
I agree with you. I just want to bring in Haley into the fray here. She has to leave right before the good part, but she's here for the first few minutes. You guys are familiar, I'm sure, with Haley. She's been huge
this is
in
the
the
first time we
Palantir
actually
community.
get to talk.
Hey guys, it's nice to be here. Can you hear and see me okay?
Yep,
No.
we gotcha.
I'm off then. That's me done. Thank you. Good to be here. Exciting
Haley,
day.
It is exciting day. Don was just answering a question, and I was about to give Greg the second turn, but since you're here and you jumped in, so I'm going to let you take the second stab at this. So I asked Dom just literally a second before you jumped on, and by the way, you're doing phenomenal work in the community.
Thank
We
you.
chat a little bit offline. I love your work.
Appreciate that.
So with the 7.5% spike today, which is a little bit crazy before earnings, do you think we're getting into the place where Palantir might be a little bit overbought? Is it too dicey at this point?
I think we could. It goes one of two ways, doesn't it? Either we do very, very well at earnings and we see it go crazy like it did last time. We saw like a 48% in 3 days or something insane last earnings. And that happens, great. Or we see the opposite where they still do well, but there is a little bit of a sell-off, people taking profits, cutting back. And to be honest with you, I would rather them obviously do very well, but then there's a slight pullback. Why? Because I'm dollar cost averaging. I would rather have lower prices. So I'm okay with either, but I would prefer there to be a little bit of a pullback post earnings, as long as they do well, of course.
Everything sounds smarter with the British accent. People are saying.
Why is that always the first comment? Always, no matter where I speak, it's British accent.
It's the American education system. It's just they can't handle it. I almost one of the reasons I've had Pete as my partner on Stock MVP because I think it'd be more marketable to have him present everything in the British accent. So I want to ask you guys. So Greg, I'm going to let you take Greg. I want to ask you the same question, but Greg is a technical trader. and is an expert in the field. So, Greg, from a technical perspective, purely, I'm a long-term investor. Dom is, Haley is, and even you have the hat of a long-term investor. But in your technical trading hat, what do you see right now with the Palantir? And you have about 2 minutes.
Actually, funny enough, I kind of agree with Haley, and I do think, well, I agree with everybody. It's going to be all sides, actually. I do think through the volatility that potentially we're going to have through this, we can skyrocket all the way to 30, just as Dom said, and very quickly break back down to 25 and 20. With this market, first of all, something that you know, and I've said in the beginning of the year, we're going to have a very volatile year, no matter what we look at, high highs, low lows. The market is going to go crazy. The traders taking high advantage of the situation, which would make sense. If you were one, you would do as well, which creates high volatility. So all of the above, I have to be realistic, and those who follow my videos know that over the longer term, I do expect a drop. I've predicted $20 when everybody said that was just completely bonkers. Happened. Of course, under the conditions and under the timing, we're going to fly a little bit higher. No weird surprise that we're stopping here at 25. Normal range, again, something that is visible through the technicals. But I do think we're going to find ourselves relatively very quickly back to 20, and potentially with the market continuing to correct down with overall market conditions, we're going to even see lower. So temporarily, for those who want to trade it, yes, you probably have a good trade here. But it does really depend on your sentiment, your risk aversion, and various elements as such.
So I'm going to ask the next question since we're having like a panel structure here for a minute before we hit earnings. So if in case if we're looking at a scenario where the stock basically pulls back right away, let's say the bear case scenario that says that Palantir is coming in hot into the earnings, they have good earnings but not good enough to justify the euphoria, and there's a pullback. Are you guys doubling down, or are you guys waiting for further pullback? What's your strategy if indeed there's a pullback?
Yeah, I can go first. So just like Haley, I've been dollar cost averaging for several years now. It's about 25, maybe close to 30% of my portfolio. So I just keep adding, but if we get that pullback to where it stays at like 24, 25, I'll be adding more. I won't double down because I think that's just a fair place at where it is, right? It's held at 20 for a very long time, for the last 3 or 4 months. And I do think they're going to have really good earnings. I think that they're going to beat expectations significantly, even higher than the revisions. Especially we can get into customer count and stuff. If they hit the customer count growth consistently of what they've been doing, I think for us who follow the company very closely, we know what that means for us, 2-3 years from now, which is a lot higher. So whether it's 25, whether it's 20, I'm going to continue adding. If it goes ridiculously down, then obviously I would add more.
Yeah.
But I mean, I see it trading within a range for a while until they have that breakout moment.
Yeah, none of us here are like professional traders, with the exception of Greg, perhaps. So Haley, I want to ask you a question. I've been watching your content, and you seem to be going really deep into the business side of things. If you had to specify like 3 things that you are focused with these earnings, 3 categories you're looking at, where your focus is. I can tell you mine in a second, but what would be your 3 main focal points with these earnings?
The first one would be customer count. Second, cash flow. Third would be, this is probably more of a cop-out answer, but more of like the commentary and the guidance and what we can expect for the future. Alex Karp, obviously, he can be quite a performer when it comes to earnings, slamming the table, getting very excited. But in the past, that's normally been met with quite a good sign. It has actually then come with quite good results. So if we get something like that again, I will feel very, very bullish. But the numbers don't lie. The data doesn't lie. If the earnings aren't what everyone is expecting, I do think there'll be a significant pullback. If that happens, like Dom has said, I will be, buying more. However, if it doesn't happen, if they beat and we stay at this sort of range, maybe go up 2-3%, again, I'm just going to carry on with my strategy. Keep buying, keep dollar cost averaging. If there's a significant pullback, I'll be adding more. as much cash as I have, really. But I'm also, I should just point out, I'm also very, very bullish on Tesla. And obviously, recently, Tesla has been having quite a significant time. So I've been using quite a lot of my spare cash there. So yeah.
We are both in the same boat for that, Haley.
Yeah, it's
really
that
trying to
kind of
Yeah.
space. You're in this, yeah. It's
I'm
the
in the
echo
safe
chamber.
space. Good.
It's the echo chamber of the Tesla Palantir bulls.
It's good to be in a safe space. It goes one of two ways with Tesla, doesn't it?
This is true.
I'll surprise you though with this. I'm about to throw you guys a curveball. By the way, shout out to the 2,000 people in the stream right now. 45 minutes before the earnings, which you're all crazy. I don't know where to look. I forgot where I placed the camera. Since you guys just agreed that we are in the echo chamber, I want to present to you Greg's medium term. Greg, would be fair to say?
I guess yes. That would be the most accurate.
Short to
correct.
medium term. Greg, can you present? I already know it because we talked offline, but Greg has a little bit more of a bearish stance on Palantir in the short medium term.
And it's nothing to hate again. It's nothing against Palantir. First of all, to be clear, I'm not a Palantir bear. In fact, just the opposite. I do think Palantir.
Greg, let us have some fun. We need a contrarian in the.
We'll become way. No, I have to present things as they are. Come on, Tom. You know me well enough. They will become a staple. They're tremendously important, but again, technicals do bring me back down to earth a little bit sometimes, and oftentimes I'm more of a bullish type. But this instance is quite problematic with regards to the overall market and what we have on the charts. Tom, can I have the chart for a sec? So the one thing that people will often present and is a bit of a worry is what you guys can see, this green range. It's a gap, basically. Just sorry, pardon me. Let's have some more real estate. So the first thing people would worry about is this gap that appears between 1979 and 1789. Ladies and gents, that's a pseudo gap, because if you switch to 4 hours, or just if you've been there for the call, you know that during the earnings, basically you had a full candle moving through. So that's why the X is 4. Basically, it's a pseudo gap. It's false. So we don't have an actual reason to break down because of that particular reason. But if you kind of look at the chart and you notice that overall, of course, the market does tend to come out and go out of these ranges. I do know that those who are more familiar will understand why the channels meet, some channels don't, but that's a very normal sort of behavior. Here you can see we got locked into the channel. So far, we've been respecting it quite well. Of course, there are major supports, major resistances, some of them psychological. But if we're going to look again, if we're going to just look at the most basic, and this is not the secret sauce, this is not really how truly I analyze, but just for it to be clear for the vast majority of public, there are two lines here, blue and orange, K and D. This is stochastic RSI. Kind of simple. I'm going to show you a couple of examples. When you have the blue line on top, the K dominant, just going to kind of lock it into a range so you can see. Whenever the K is dominant, you're going to have a rally. Okay, you're going to have a bullish momentum, and when you're going to have that orange dominant, basically the D, you're going to have the opposite. Although with the market pushing sentiment and so forth, although here on the technical indicator it might appear as the market is pulling back, in reality over time it's going to be more of a sideways thing. As you can see, the market, this is all sideways basically. So if we just set all this aside and we look objectively at the monthly, sort of the same parameters that we just looked at, we're going to realize that two things are happening. First of all, this convergence that is about to happen right here. And as we've presented, when blue dominant, good for the buyers, when orange is dominant, bad. As you can see, these come to switch overs. And right about here, we're about to switch over. So as you can see, ladies and gents, we sort of got stuck in a channel. We've already tested certain highs. I'm not those who know the golden pocket and various technical supports and resistances that are major and important. And from here on out, we're probably going to go for a retest. As you guys know, the market often likes to, if achieve a certain level, retest it back and forth. I'm sorry to say, to use the terminology, but to death until the market approves, and then we go onwards. And as much as people don't like technical traders, we are a big part of the market, and I'm not the only one who's seeing this, and anybody else who is seeing this, of course, will take advantage. It just kind of, it goes hand in hand. Also, again, in my videos, and Tom knows better, I present all the cases for economic issues that are going to come into the overall market, and Palantir, whether we like it or not, although generally thrives on these on turmoil.
Yeah, when God sneezes,
It-
everybody gets wet.
Exactly. If
Yeah.
it's a tsunami, everybody gets
Yeah.
wet. So yeah, but hey, for
Yeah, that's
us,
fair.
for all of us, it's great. We can buy more. So it's a bearish bullish case.
Thank you, Greg. Dom, I want to
My pleasure.
pass it off to you, and then Haley, if you got another like 9 minutes, so I want to take advantage
Yeah,
of that. As
I'm
well.
good at the moment.
Okay, cool. So Dom, I don't want to say names, but you worked in SaaS for a couple decades now as a senior position in business development. So you understand software, you understand this industry from the inside, from a C-level position. So can you tell me a little bit about why you are so excited long term about Palantir, coming from the industry and from the inside?
Yeah, I'll try to do it very concisely. They
I
have
hyped you up a little bit, but it's it's just facts.
they have a very different business model. They are very customer centric, and the technology that they've delivered for anyone who's new to Palantir is really, a lot of customer companies say this, outcomes focused, but they truly are focused on return of value. That's why they are able to actually not have a standardized pricing model. That's very, very uncommon in the SaaS industry, to be able to actually have customer-centric pricing based on the value they deliver. The AIP boot camps are a great example of this. I have never seen a company actually tell customers to bring production data and bring it for a 5-day boot camp and guarantee that they're going to walk away with what's called an MVP, a minimum viable product, something they can start using and show execs. Your product has to be on point, and your engineers have to be phenomenal to be able to do that. That could really be a blow from a PR perspective if it doesn't go well. They're delivering 80% gross margins for the last, 4 or 5 years, whatever, even before they were public. It actually grew to 84%, which is phenomenal. And Cart doesn't lie, as far as they are extremely hit up with people wanting to work there. All 3 of my top holdings have that same thing in common. Where do the smartest people want to work? NVIDIA, Palantir, Tesla. It's extremely hard to get into those companies. And from a business standpoint, my 3 things that I'll be watching, somewhat similar to yours, Tom. I know you talked about it a little bit earlier yesterday. Number one, they do have to, I think, beat Wall Street's revised earnings and numbers. If they don't, I think they end up actually going down. Second, I really want to see them get to 251 customers on US commercial. Why is that number so important? That would be a 30 customer increase, and that would mean that they would have their total commercial group stay consistent, which was 8% sequential growth and 44% year-over-year growth. The best case scenario is if they actually stay consistent. I'm sorry, that would be the worst case. That would be what they did in Q1 of last year, was 8% sequential. If they do what they did last quarter, which is 14%, because they've been growing at a higher rate, then they would actually be growing their total commercial customer count at 52% year over year. And that would give them 427 customers, which would be a huge lift for I think how people will respond. And then the last piece is, are those top 20 customers still growing 10% sequentially every year over year, every quarter? So right now, the last quarter was 55 million. Each top 20 customer on average spent. My goal is if they spend 61 million, that would be consistent. And why is that so important? Because their technology is built on a CPU usage billing model, and it's built on the actual expansion of the usage of the platform. So the more and more those top 20 customers are spending, it's actually validating the entire thesis, because as they have these new customers come on from AIP, they will eventually get to much higher values. So it's all around the business model that the tech's built on.
And by the way, I just want to show this on the screen. so you guys know Dom knows what the hell he's talking about. This is an article he put out about NVIDIA from May of 2023, in which he told you all this is going to happen. The stock price was at 300 when this article came out. And it's not his only work in the field. So he's a modest dude, but he knows what the hell he's talking about.
Thanks, Tom.
So I think you have one of the best Seeking Alpha content in existence. But this is just to show guys and girls in the chat that you know what you're talking about. So shout out to the 2,500 people here in the chat. Haley, I want to turn it over to you, and then I'll let Greg have his thing. So Haley, we don't do price targets here except thumbnails, where it's allowed to say anything like 500. But thumbnails aside, and I will never put 500 in the thumbnail. That's so wrong.
How dare you,
But-
Tom?
Yeah, that's disgusting. But yeah, thumbnails aside, jokes aside, where do you see Palantir's? What's your 5-year price target for Palantir? Like,
That's a big question. That is a big question. 5 years.
I'll give you my answer first, and then you can kind of gauge what.
Okay,
what kind
I'm
of
hesitant to
question is.
answer because you know what happens when you give a price target publicly. Everyone
Well,
grabs that.
Look, whatever you say, once you put yourself out there, whatever you say, people are going to twist against you. Even
Yeah,
Dom has this NVIDIA article in which he was right, and some guys make videos about me saying I was wrong about Palantir because I called it too early. I mean, people always twist about what. It's just a thing. But I'll tell you what
true.
my answer is to this question, just to give you an idea of what I'm asking.
Mhm.
So
I'll see
I
if
look at
I'm
Palantir.
higher or lower.
Excuse me.
I'll see if I'm higher or lower than what you're anticipating.
So my understanding of Palantir is, look, I am always I went to law school, so I'm always thinking about the worst case scenario, right? So to me, what's the bottom? What's the floor for Palantir, right? The way they already got things set up. So for me, it's Salesforce, it's CRM, right? It's a B2B business. It's a gold standard in the industry. It's a quasi monopolistic somewhat, and it's a good B2B business. So 200 billion, 250 billion, that's the floor for this company. So for me, if it's a Salesforce equivalent, and I think Salesforce would be a very low bar to clear, given what I think about the company. So at least from this point on, at least 10x, right, for the next 5 years. That's my understanding. I think it might be more, but at the very least, like the way I think about it, so bottom worst case scenario, worst case bull case scenario would be a Salesforce equivalent, so 250 billion market cap. So that's kind of the mindset I have. So not specifically, I think the stock will go to. Where do you see it? Kind of, what's the equivalent you have in the market for it right now?
Yeah, I'm kind of in agreement with what you said here. The thing that I think about when it comes to Palantir is, and this sort of relates to other tech stocks at the moment as well, is we have a lot of commentary and a lot of frustration and concern about the macro, right? There's this going on. There's this geopolitical issue. There's interest rates are a bit uncertain. So therefore, I'm just going to use Tesla as an example here. Tesla are in for a rough time, and you know what, the stock price is going to be not very good for a while until this sorts out and this sorts out and the supply chain figures itself out. Those worries, that they're legit, and they translate over to Palantir as well. However, I think a lot of people forget that Palantir are also somewhat detached from that in terms of they have their whole defense government side. So even though their commercial side, let's just say that takes a bit of a battering because of X, Y, and Z, they can sort of play to their strengths when the geopolitical situation isn't good. And Tom, you've probably seen this firsthand as well. You get a lot of comments when you talk about Palantir about, oh, why are you backing a company that are pro this, pro that, gaining, making money when times are not great for other people. But as an investor, that is quite a strength. And I'm going off topic here, but I'll bring it back. Along with the total addressable market, how wide reaching the commercial side is, that is what excites me, probably one of the most points that excite me. We also have to remember that they're not just relying on the commercial customers. They also have an entire separate side of their business. And there aren't many companies, and I mean, someone in the comments I'm sure can think of one. There are not many other companies that are in that unique position whereby they have government and commercial. So bringing it back to your question, I'm not too concerned about them as long as they do well, obviously, and they keep growing their numbers and everything's in place. I think I'm pushing towards more of your bullish case. I do think that for a
Be
very
careful.
long
My
time,
bullish case is Microsoft.
okay.
So my
Well,
range is
you know,
Microsoft to Salesforce. So be careful.
for a very long time, I think Palantir were really struggling with sales. Even though I'm very bullish on Palantir, I think for a very long time they weren't converting very well at all. AIP boot camps, that seems to be the solution. So now my sort of cap in my mind is expanding because I'm seeing how they're actually pushing those sales. And I think, and correct me if I'm wrong, someone correct me if I'm wrong, are they doing like 5 a day now? Something crazy?
That's what Bloomberg reported, yeah.
That's where I got that figure from, which is insane. And they're obviously, Dom, you were speaking about this earlier about them hiring. I'm sure that one of the main reasons that they're hiring is so that they can expand that. So, yeah, I get very excited.
Clear on Tom's initial call. Was it $200 a share or 200 billion market
No,
cap?
I meant 250 billion market cap.
Okay, so that means that then it would be a 5x from here.
In 5 years?
Yeah.
No,
It's
yeah,
50 billion right now.
yeah.
Yeah.
Tom, you said 10x, didn't you, in 5 years?
No,
You said 10x,
I'm a
but-
dumbass because I was thinking about the share price.
Yeah, that's exactly why. Yeah. That's,
I'm an
so
idiot.
I wanted
I was
to
thinking
know
about the
if
share
it's
price.
going to 10x or 5x.
Yeah.
'cause-
I meant 250 billion market cap.
okay,
Somebody's
yeah,
gonna
that-
clip this, and it's gonna be like a roast.
Yeah. So
I'm
my
really
bear-
confused now.
I'll explain.
My-
I'll
my
explain.
bearish
He
is-
understood me
is-
because he's a dude. So when I was saying I was on the flow, and I was saying it's gonna 10x because I was thinking about the share price. But what I was actually saying is 250 billion, and it's currently a 50 billion market cap or so. So
What do you think the share price is going to do?
well,
I mean,
yeah.
predictions.
So Salesforce equivalent. So it has to be 5x from here. So what? 125.
okay.
I'm kidding.
I'm gonna push the boat out and say I think 150.
Yeah, possible. Look, my
I
bull
think-
case is all the way to Microsoft. So
Yeah. To be honest, I think that this earnings is very important. I think that the S&P 500 inclusion, hopefully in June, is going to be an important milestone. And these are just going to keep changing. Come back to me in 5 months and ask me the same question.
before we let you go, I know you're on the clock.
Oh,
I just
yes.
want to let you know this guy is a flake. His name is Arnon. He's one of my moderators. He only joins to get the spreadsheet, the Excel spreadsheet I had 4 years ago, and he stayed ever since. He doesn't even know why. He doesn't even like me, but he stays as a community member. So be careful with him when he joins your community.
But yeah.
But Haley, thank you so much for joining. Jokes aside,
you.
Arnold, thank you so much. Haley, thank you for joining us. Pleasant presence as always, and very clear and concise stuff.
Yeah. Appreciate
Jump on
it, guys.
back if you have more time later. You're more than welcome.
Yeah. And let's go beat all the market estimates, guys. We've got
right.
this.
Right.
Go
See you
green.
later.
That's the only time I'm going to say go green. Haley, thank you so much.
Thank you, guys.
Thanks,
Bye
Haley.
bye.
So, Greg, I'm going to turn it over to you since now it's your turn. We're almost at 8% on the day. Greg, before I go to Dom, I have a really good question. Shout out to the 3,000 people in the chat right now. And shout out to Kelly, the one and only, who's here. And she's definitely a real person. I'm just saying.
For sure.
So, Greg, no, she is. Greg, I wanted to ask you a question. Haley mentioned earlier macro fears. You've been beating the drum about the oil prices, interest rates. So you have a little bit more bearish stance on the overall market for the next, let's say, 6 months. Can you
Correct.
give us in just 2 minutes kind of your thesis about why you think the market is at a top right now?
Well, again, there are the technical parameters, and it's something that I've been talking about in the community quite in depth. And if it's harmonic patterns, just structure overall, oftentimes, by the way, people are sort of misled. It really depends on how you observe the charts, how you look at them. Oftentimes, people look at them in a linear fashion, which kind of hides a lot of data, really. Really depends on the time frames that you switch between. Tom, do you remember when the whole pandemic started and I was saying we're going to go sideways for a long time, right? Remember that? So from this point of view, it's kind of hard to see this, but the more I'm going to switch out, the more it's going to become evident. And when you have more of a perception of an institution, here you go. Every candlestick represents 12 months, hence a year. So 3 years, and only this one is a breakout. And by the way, don't forget this one to lock in has still 7 more months. In other words, it just can revert all the way through, and we're going to be going 4 years sideways. So my overall perception, and I've been talking about it since the beginning, I was expecting the Fed to go more stronger under the circumstances. They kind of had the two choices here: either make it more painful and quicker, meaning the lows of COVID should have been actually lower. They ended up being rather convenient all in all. They could have been, again, far worse. And by doing that, they basically kicked the can down the road, and they are presenting a case in which the market does help them deal with the situation. But we cannot ignore oil prices that normally you would hear the experts yelling, screaming their head off, sell at 70, simply because that's the range. And right now we've actually been to 87, scratching the 90. And oil inevitably going to affect everything and anything. People who entered COVID with savings now are buying food with buy now, pay later services and credit. Most of them are in debt. On paper, they have money in the stock market. And once they see these profits start shrinking, they will capitulate, because people, of course, once the market starts to capitulate, it's like a snowball, and essentially.
You sound like Jamie Dimon now.
Because actually, again, I agree with the men 1000%. And part of my prediction was predicated on the men talking about 150 oil when we were still sitting at 60 and 50. And we know he's a bit.
Didn't oil been dropping lately? Ever
Yes,
since
but exactly. I was actually about to point it out if my chart is on the screen. So yeah, the oil has been dropping a little bit, and I've been talking about how really we've been moving in this sort of between two channels and making our way steady right to this range, and now we completely deviated. Tom, you've seen this before. The market can deviate, and as long as we hold certain supports, and in fact, maybe I was too fast to assume that we've tested this resistance of the 78, 80 area. We actually have various supports and resistances there, so it shouldn't have been. You know what is the abnormality? Not the fact that the price dropped so low, the fact that the price went ballistic instead of climbing steadily, right? But we know we're testing certain supports and resistances. As much as it
So
seems an
basically,
abnormality,
you're thinking about
it's
oil as
normal.
the catalyst. Oil is the catalyst
A
in
big
the
part of it, because as I said, the market is already very
Mhm.
fragile. It will take almost nothing to break it at this point, and we're starting
Okay.
to see it through the indices, through the individual assets. The fact of the matter that the S&P looks like Swiss cheese, which is tremendously abnormal, and it can remain and have gaps, but for a certain period of time, and eventually they get closed. Even if not all of them, for us to close 90% of our gaps right now, we already find ourselves in the low 4,000s. So there are various factors, and again, as Haley said, macroeconomic conditions are not great. And I don't know if you guys know, Israel IDF just went into Rafah. They're doing their best, of course, to reduce, have the minimal amount of casualties, but it's inevitable, and it's a matter of time until Lebanon will get involved.
We're getting sidetracked into geopolitics here. Hold on a second.
No, but these things will
Hang
play
in-
a big
hang in
role.
there.
Red Sea is still a problem.
No,
Supply
just
chain is still a
the
problem.
general assumption is that the world is going to chaos. Yeah.
I wouldn't say chaos, but definitely a bit of a dumpster fire for a bit
Okay.
of time. Yeah.
So that's fair. Dom, I want to turn it over to you. I want to ask you a question a little bit from your world, as we just hit 8.3% on the day, which is absolutely wacko. Dom, can you explain to us a little bit the life cycle of onboarding a new client in the way Palantir does it? Because I think it's one of the most misunderstood things about this company. Because people see all these numbers from AIPs, from boot camps, from the demos, new customer accounts, and all sorts of things like this, and then they only see 18% increase in revenue. So can you explain to us that lag that gets created, and how long until we can expect to see it closed in the revenue structure?
Yeah. One of the things that they expect their customers to do and prospects is to know what actual problems they're actually trying to solve. They put it back on the onus of the customer. When you walk into these boot camps, what are you trying to achieve? And then we'll actually go help you solve that. They spend a lot of time with the customer understanding a specific use case that they can focus on with a forward deployed engineer. They now can do that a little bit remotely with some of the new AIP features. And one of the longer taking times in the process of onboarding is building the ontology. Once you build the ontology, then all of a sudden all the data is ingested. You can really start tackling different use cases, and the momentum, really progresses. But they don't try to boil the ocean. They try to focus on showing a true value returned, whether it's one department, multiple. They're getting that mind share. Sometimes they get the CEO's mind share from the get-go, but most of the time in enterprise spend, when we talk about multi-million-dollar contracts, you are having to work your funnel up into the higher C-suite for larger purchases. Honestly, that's why it's so phenomenal. When you look at another stat that I'm going to be looking to see if they report on, was Q4. They said they did 103 deals over $1 million. 36% of those deals were over 5 million, and 20% were over 10 million. So they are getting faster at solving larger use cases for customers. But that process and focusing on delivering an actual value and result, and so the return on investment is so fast, they're getting 3 and 5 year contracts. That's not normal in the world of SaaS. In the normal world of SaaS, things are so competitive and products are so similar. People buy 1 year contracts and then they reevaluate. But the tech is so good, it truly is like 0 to 1, Peter Thiel's book. It's 10x better, and that's why you're getting customers' comments on these boot camps on how wowed they are.
I also want to give a huge shout out to Dennis for the $10 donation super chat. Dennis, that's really appreciated. Thank you so much, brother. You didn't write any text, so if you want to comment, I'll highlight your comment for the audience. That's usually part of the perk, but thank you so much, Dennis. Appreciate it. So Dom, I want to follow up that, and then I'll go back to Greg. So obviously, you are a product of the environment, right? You work in biz dev, in SaaS, so you speak to other biz dev people in SaaS. So what's the community talking about as far as when they bring up the name Palantir? What are your colleagues, former colleagues, are talking about?
Honestly, there's still a lot of people in the industry that aren't aware of the company. There are in the engineering community, in the developer community, definitely, I think they're getting more and more recognition and awareness. But overall, I still think it's a very misunderstood company right now in the industry and even in the market. That's eventually going to fade, where everyone's going to start knowing who Palantir is, and that opportunity to make those generational wealth capabilities will be shorter and shorter, less opportunity, because you're seeing them amp up the more participation in conferences and LinkedIn, all these things that you normally see SaaS companies participate in. They're now starting to pop up and show themselves at different conferences in different areas. So I think you're going to see, especially with FedStart, that's another thing that, just talking about 3 big catalysts that people need to be aware of on the call. One, I hope they talk more about FedStart, and if they're still on pace to do IL6 next quarter, that will definitely be a driver for them. Q4 of this coming year is actually FedRAMP High. That will be a significant driver in the SaaS world, and a revenue increased piece that they'll get a lot more commercial customers participating, because everyone wants to be FedRAMP High, not moderate. And then the third thing is AIP Now. If you haven't seen CodeStrap's video, you might need to rewatch it a couple times before you digest everything. But I had a conversation with a Palantir engineer. I'll leave his name out, but we were talking about how one of the opportunities that Palantir has is to really be the new marketplace for building apps for developers. And his video, Code Strap, articulates all of that in how you can get the HIPAA requirements, the compliance, and all of the things you need from Palantir by building on Foundry with AIP now. What normally takes companies years and millions of dollars to invest in their R&D to meet all of those things, they can speed up and automatically meet those requirements by building on AIP now, which I do believe will be their next catalyst, which will be developers and companies building their products on the Foundry marketplace.
I just want to remind the 2,700 people who are watching that Dom is not only a professional that works in biz dev of software as a service companies of large companies, which you all know because the household names. He also told you to buy Palantir and Nvidia about a year ago. So if you listen to him, you could have made 200%.
You can look at my old YouTube channel when I wanted to be like you and dominating your investments and laugh. But in 2019, I was saying that NVIDIA was going to be a $2 trillion market cap before 2029, and we're already
You don't have to go all the way back there. In 2023, you put on articles saying NVIDIA is going to go crazy when it was 300, and same for Palantir. So very, very credible stuff here from Dom. MVAT with the $10 Canadian donation. Have you seen Civil War with the Canadian dollar joke?
I have not.
So there's a little... there's a point there in the gas station, and he said, we had $300. There's like a civil war, everything's collapsing. It's like for 300, you can get a sub, like a mayonnaise sub. It's like a Canadian. I was like, oh. Thank you for the knowledge, Tom. I'm here because of you. Flattery will get you everywhere, MVAT. Please continue. That was very good for me. Guys, I want to bring this up, Greg, for you as well. So this is the page with all the Palantir voted questions from retail investors, and I want to go through the questions. We have a little bit more time before the earnings come out, and let you guys take a crack at any of these. So Dom, I'll let you ask the first one. To try to pick up the first one. You know what? I'll do the first one. You guys can prep with the second and the third. Greg, I'll let you do the third one, and Dom, you'll do the second one. So. Santosh K, that's the most upvoted question, asks, are there any merger acquisition discussions going on? Now, I'm going to say right here, I don't know. I don't have a crystal ball, but I would guess no. And I will tell you why I think Palantir will never be acquired by any of the big companies. They would love to buy Palantir a long time ago. The reason Palantir was never a target and will never be a target, even though they would love to clean the slate and get rid of Palantir, is because of two very simple things. Number one, Palantir's business has a poison pill. All these companies that do business in China, that are potentially in China and the other places in the world where Palantir doesn't, once they own Palantir, all the government business, all the DoD stuff, they go away. A lot of them go away, which basically makes the company half as valuable. The other part is that the CARP and the Peter Thiel, they have a poison pill structured in, which called the Class F shares, and I don't think the F was accidental. I think it was very intentional. Class F shares essentially give them for life veto over everything, and no acquirer would want that. A guy like Thiel and Carr basically on your neck forever. So with those two things, plus I don't think Peter Thiel wants to sell, and I don't think Carp wants to sell. So the combination of these three factors make me think that the answer is probably no. I don't know if you get this answer from Palantir, because they'll have to answer more in the legal mumbo jumbo talk. But this is just the real talk. What's going on? Dom, would you agree, disagree? And then I'll take you. I'll let you.
Yeah, for sure. I am curious. Do you think they would ever consider having an ownership stake or merging at all with Anduril?
Oh, well, that's a whole different. That's the only case where it works. But I was just thinking about getting bought out by one of the big.
No, they're not going to get bought out.
Yeah.
I was thinking of them.
Yeah,
if they
that makes
found
sense.
a particular technology they wanted to acquire since they have so much cash.
Yeah, either that or some sort of a JV where they put IP together into one SPV when they do some sort of JV work together for sure. Yeah, they match perfectly, these two guys. Yeah, for sure. So Greg, good to have you back. So since Dom and I talk less, I'll let you have your question first. Yeah. Greg, Evans asks, when will Palantir be added to the S&P 500? And I'm going to add this question with a little spice for you, Greg. what would the addition to the S&P 500 do to the stock from a technical perspective?
Yes, thank you very much for asking that. Well, I was certain that it's not going to happen. Previous time, actually, kind of gave a nod in various places. I thought that's not going to happen. It is getting closer, obviously, as they're going to as they're going to show profitability. The chances and the likelihood is getting, of course, it's increasing, and it's pretty much an evident thing. Uh, Probably next time around, S&P will be getting rebalanced. Potentially very high. Again, the closer we get, the easier going to be determined. But, and this is what I wanted to sort of come back at Haley earlier to say, that's not necessarily a positive thing, because the reality is, the more, if we're going to get inclusion, it's going to get more affected. And if the market is going to correct, as I'm saying, it's not just going to be get wet, it's going to be fully submerged.
Okay, that's fair. Dom, perfect question for you. What's your vision for the next 10 years? Will you emerge as a global leader for AI? What AI products and services can we expect from Palantir in the next 5 years? Thank you. I matched the questions perfectly to the expertise of each panelist.
Yeah. I think Carp would say it initially. I already told you that last time.
Yeah,
We're already gonna win the. We already
He's gonna get pissed.
Yeah,
He's
I
gonna
mean,
get
he's already
pissed.
going to say that. And I don't anticipate them dropping any product announcements. But they should definitely check out the documentation and the news site on Foundry's documentation site, because it always tells you about new things that are beta programs. And they have a new one with AIP logic. And then obviously they've been talking about AIP now. I really do think that they are going to focus on enabling their current customer base. You already saw Ringier hosting their own AIB boot camps, and other customers that they have had for years hosting their own boot camps. I do think we're going to see more products like Skywise emerge, that people are changing the dynamics of industries, healthcare being one that Palantir is really focused on. They're going to be doing that, building on Foundry and AIP. And it's going to result in residual revenue.
Yeah. Here's a question here. Now that you have successfully gotten to profitability, do you think you will be able to continue growing EPS? Any risks to profitability growth? I think the obvious answer for the first part of the question is yes. Risks plenty. I mean, obviously, I think Palantir has a major concentration risk that nobody talks about enough. I mean, 20 clients basically are 50% of their revenue, which is a massive concentration risk they have to address. On top of it, there's there's always a risk from a Palantir competitor perspective if Microsoft pushes hard in Fabric. So I think there's going to be a turf war between Microsoft and Palantir, and I think it ends with a two-headed monster. But the size of each head depends on how good Palantir grabs real estate in that battle, which is not going to be a simple one. I mean, Palantir is a great company, but Microsoft fights very, very harsh. Let's put it this way. So yeah, there's plenty of risks. Do you guys see any other risks that I haven't mentioned?
I think if leadership changes.
Oh yeah, I got into a little bit of a drama over that. Have you seen?
No.
Yeah, so I agree with you 100%. And I caught some guy saying that he wants the Palantir Alex Karp to leave Palantir, and I went at him.
Man, that would be a mistake.
And then he said, no, I said lead, and my entire post basically got. I was like, oh shit. So I had to post like an apology saying, hey, my bad, I take the L.
I think one of the things that make them so unique is the culture they have.
Yeah.
And you look at Tesla, it has the same type of uniqueness, even whether you hate them, love them, or anything like that. Same thing with NVIDIA. Companies that can have a sustainable culture as they grow is very unique, especially in technology.
Yeah, that's fair. We talked about it offline. They're very true to their culture, whether you love it or hate it. They're not going to veer off. Okay, so I'm trying to see if there's any more interesting questions here. That's the one I really want them to ask. I don't think. Look, I don't think buybacks is a good idea for Palantir at this stage. I'm not promoting that, but I think it's interesting to see where they see buy. I don't think it's a buyback territory right now.
No.
I think they don't answer this question. I don't think it gets pulled up in the questions. Dividends. That's a ridiculous question. Yeah, that's not that. You can see the quality of the questions kind of drop if you go a little bit lower. That's actually a yes. You know who told me this is a yes? So is Palantir providing any services to Tesla? That's a cool question, right? So you know who confirmed to me this? Sham himself when I spoke to him. Because I was chatting with Sham before the podcast we did, and he was telling me about how Palantir is deployed in the gigafactories through the battery makers.
That's what I thought through Panasonic. Yeah.
Yeah. So because they're on Panasonic, so they're basically already working with Tesla on a daily. So the answer is yes to this one. We can. And
I
if
think
we have
the question above it's very interesting. Not the way they worded it, but I really would like to see and know: do they plan on actually
merge with Oracle?
No, not merge. No. I'm sorry.
Yeah, but I understand the question. You're right. It's a great question. So
do
I'll
they
let you
plan on actually scaling with one of the CSPs? Because the partnerships they've had with AWS, Google, and Azure have not actually yielded a whole bunch of revenue and any leads coming from those global cloud providers. But with Oracle and them being the leader in the database market, maybe they actually do try to partner close with Salesforces to drive unique scenarios. And then also Oracle does own Cerner, so there's another healthcare play to be had.
Yeah, that's a great question. I didn't even think about it, and it has 420 votes, which means it's legit. So as we get closer to earnings, 3 more minutes left. I want to see if we
Smash
have
like everyone.
Oh yeah, so one important thing to mention, if you guys want to support the stream, there's 3,400 people here in the stream. If you guys want to support the stream and help us get circulated by the almighty YouTube algorithm, we love you, algorithm. Make sure you just smash that like button. I usually don't ask this, but it's free and it helps us kind of circulate this. So thank you, we appreciate it. So 2 minutes before the earnings, I'm gonna take a few questions from the chat. So guys, you in the chat, YouTube, you got a chance to ask Dominic, Greg, or myself a question. The only thing you have to do is type in the queue so we know it's a question, and then ask your question away, and then we'll use the next couple of minutes to do a little Q&A since you guys have been here from the beginning. Okay, so this is a question for Greg. It's a technical question. Greg, Dave Baum is asking, why is Palantir up 8% before earnings? What was the news?
No news. Again, that's part of the hype. That's part of the process. That's just regular trading. I mean, I wouldn't say that there's a lot of news. Actually, there's a lot of positive news, but that's
Isn't
the
it just
sentiment.
based on the assumption that the earnings will fly up?
It's the sentiment. That's all it is. You're seeing the sentiment play through. But also, if we are more educated and really trying to look behind the scenes, it's highly unlikely that the average retail trader got together and is pushing so hard. This smells to me like institutional money at this point. And they will probably pull. This is, again, if it's a snowball that is running down, imagine the institutions are also kind of running next to it and pushing it along. So that's the reality. That's how they make their money. And there's nothing, again, that's the way the cookie crumbles. So I'm sorry to say that's why I'm truly expecting the market potentially to rally slightly as we go into earnings. Just simply the institutions taking advantage and just liquidate all of it. And those who hold the bags essentially end up holding the bags. This is security for later. It actually serves two purposes. I'm not going to go too deep, but the mechanism of the market is extremely sophisticated.
Greg, another question for you. It's a technical question. We talked about this offline. Can you repeat what you told me offline? Does today's run up already have earnings priced in? Basically, they're asking if everything is already baked in.
Right now, if you're going to turn on I'm sharing screen, I'm not sharing. We just rallied to 26 in a second. Here, I'm going to turn on my stream so you guys can see what's going on with the stock. Hold on. I'm going to try and get this done real quick. Why am I a minute? I don't have the share. Oh, here it is. Sorry. Those of you who are not watching, maybe some of you are watching, but the stock is going ballistic here. Sorry, the question.
Is the
pricing.
earnings beat already baked into this price?
Yes.
technically?
Yes.
And if so, what's the right strategy to mitigate that risk?
That's a
gonna answer
wonderful
the question.
question. Me and Tom actually discussed this. It depends on where you entered. It really depends whether I doubt you were able to capitalize on all 60 something percent. Let's say you got, as the example me and Tom brought up, let's say you are 40% up. It's more than a good idea. Again, you do you, but I in this instance would liquidate either 30, 40, or 50%, depending on your initial investment. Believe it or not, you having that money secured will allow you to go forward with a lot better confidence, because knowing that your risk is significantly mitigated. So I personally highly sort of recommend to the community, those who we spoke to mitigate risk in these sort of instances. Tighten up your stop losses and take profits depending on how you stand, but make sure you, especially if you're tremendously profitable, take between 30 to 50% off the table. Of course, up to convenience and depending on your initial investment. That's what we would be doing in this instance. You do you, of course, not financial advice.
Okay, that's a fair answer. I'm gonna pop in to see what's going on with the stock price, and I'll have to refresh this page, I think, for this to happen. So after hours, it says 1.6% up. So it means that somewhere, some Bloomberg terminal has this already, Greg. We can still. I'm on the investors page.
Yes, I'm waiting.
Palantir. So Dom, if you can find it, let me know. Us simple human beings without a Bloomberg terminal, we don't have it yet.
Someone posted in the chat, Palantir adjusted EPS 8.
Let's pull it up.
Q1 revenue 634 million, estimated 615.
Okay, let's pull it up.
I don't know if that's the results right there.
I'm gonna try and see, guys. See if you can find it anywhere. It's of course it's never on the investor relations page.
If you want, Tom, you can bring up the chart for the time being from my stream. It's showing the live price action.
Okay, 1 second.
People can follow.
Palantir.
I wanted to say all in all it did nothing, but now it's actually sort of doing something. Now we're actually 26 again, and 26, 22. That's actually a lot.
I'm going to pull it up on the so you can talk through the action, and I'm going to try and find the. I don't know if this number is legit. I'm still trying to figure out. Dom, can you find it anywhere?
I'm not seeing it anywhere. It's definitely not on the investor relations or anything else.
But I also can't see it online yet.
Yeah, I know.
Not on any. It's either the person who posted this has a Bloomberg terminal, or he's full of shit.
Doesn't
you never know.
They
It's
have
the internet, folks. It's the internet. You never know. That's the problem. You never know.
True.
Okay, that's more like it. 2637.
So, Greg, talk us through the action.
Or no,
out?
No, never mind. They changed the earnings page though, because now when you scroll down, you see all of them in a row. So.
Oh, okay. So, Greg, while we wait for them to 5,000 people, 5,200 people in the chat. Shout out to you all. I think it's a record for the channel. I want to ask you, Greg, talk us through the action. Like, bring us into the live price action right now.
Normal. I hate to sound boring, but normal volatility. Again, very normal in expectation of the market. Probably a ton of institutions, bots reacting. Since most retail traders can't really do anything, and those who can, it's a very long, tedious process. You and I, Tom, spoke about it today. It's not something they're going to do on a whim. But right now it's kind of boring, with all honesty. For example, Dom and I kind of expected something a little bit
Oh, big beat.
more.
If this is true, it's big beat on the revenue.
Potentially, yeah, the market right now presenting as if the numbers are good. The question is the
Oh, beat on
forward
everything.
expectation. This is where the tricky part will come.
Yeah. So it seems like they've beat, but I really want to see their official publication, and they haven't put it out anywhere. Right? I can I can't see it anywhere yet. They always do this where it takes them a minute to find it. So Greg, talk us through the action as we flying up 3.5% flying up. Talk to us. 5,400 people in the chat are listening to you explain
There
the
is
price
actually a
action.
range, just to kind of put it, those who are in the know, those who are a bit of a shout out of the community. Tom, you might as well do one for the Discord. I have a whole community inside of the community there. The people who mostly focus on technicals will recognize these two numbers, and it's not really that surprising that the price action got locked in this little range. Of course, it's a range within a range. Those who know what I'm talking about know. But yeah, this is not, I hate to say, this is tremendously boring. People oftentimes tend to look at what's going on in relative, like this is highly volatile relative to this. Of course, the day prior to and as we go will be rather boring, but if you kind of zoom out, oftentimes you'll see that this is rather normal price action. We're not doing anything abnormal at the moment. Of course, it's all over the place, but it makes sense. Right now, I would say, ladies and gents, just hold on and wait. It's going to be rather volatile for the next, I guess, 30 minutes until we're going to have some obvious results, and we're going to have the forward outlook. This is the most important.
I see the
I would
numbers.
think we have some conservative pullback. With it looks like Q2 is a very conservative guidance. It says here on X, everyone's giving these same exact numbers that are on your screen.
Yeah,
Guidance
Let's
for
take
next
also.
quarter is 649 to 653. So versus a 641 estimate. So they did level up, but not by much. So maybe in a couple days or even tomorrow we see a pullback.
It's
I
interesting.
wouldn't even say. I would say first of all, let's wait for the call. A lot of things can change. Right now, to be fair. You know what? I will
They
say
did their
that
job, Dom, right? They did their job. Their job was to beat.
Yeah, they beat all the way
They
across
beat
the
all.
board and raised guidance. I mean, they did their job. It's not the NVIDIA moment, which is good for us because then maybe we have a chance to just keep piling in before that.
Right.
But Greg, I
More
want
so,
to
this
ask
is
you a
very
question,
tame.
Greg. I want to bring the mic back to you. So talk to us. I'm not a trader. So how do we go from earnings beat, then it jumps up by 3%, and now we're down 2% in
That's
10
the
minutes?
magic. That
Talk to us.
means that again, that literally what we were just discussing a second. First of all in all, it's not done. It's not all said and done yet, guys. There's a long way to go before it's all locked in. And
Hello, Mr. Coachstrap, by the way.
Yo,
hello. And again, we have some time before it's all said and done. But for right now, it's sort of what we said. The institutions are propping the price up to benefit from this sort of cycle, from this impulse, essentially. For them, it's just an average day, nothing out of the ordinary. And and more so, we need to understand the powers, the institutions, the people who are like me and far better. I'm, with all jokes aside, as good as Tom is, I am. They probably have a little army of me's that are far more accurate, with all due respect. And again, they know the overall market conditions, and they're not going to play into their own trap. So you're just seeing the outcome. This is actually a very normal circumstance. They play, I hate to say it, ladies and gents, but they play your emotions. You can see it on the screen. Again, it's not all said and done. This could revert, and actually we could end up going to 30, as Dom and I were saying. This is very normal. But for right now, we're seeing the adverse. For right now, we're seeing as if this was mostly a liquidity trap, and those who were hesitant now will get stuck. That's
So basically, what as we're now down 5.1%. So Palantir beat across the board, and the stock is down 5%, which only kind of brings me back to what we were talking about an hour ago, which is basically the beat was priced in, they beat as expected, and now basically the profits are being taken out.
Correct.
Okay, Mr. Coatstrap, good to see you here, buddy.
Yo, what's up, everyone?
Gandalf is here, folks. We can all relax.
Taking a quick lunch break, and thought I'd jump
how long
on,
we got you
say hi.
for?
Just a few. Probably like 15 minutes.
Okay, cool. So while we
Yeah.
got you here, Dom was recommending it to everybody for the past hour nonstop to watch your video about AIP, which I second.
Thanks for the plug, dude. Thanks for the plug.
Yeah.
Hey, it's good.
Yeah.
People don't understand how important AIP now is going to be for their catalyst.
I think it is, yeah, and just the long-term growth. I think it's one of those things that's very unique in their product is the way in which you can distribute software. It's been like something that's been under the radar for a long time, but it's like such a different way compared to the way we do it today, where it's like typical SaaS product today. You got to spin up all your own infrastructure. It creates another data silo. You got to find a BI connector to get the data back to the customer. If you just replace all that with like a Foundry native app, wow, like I'm not paying for compute. I don't have to worry about data transfer. It's built on top of the data infrastructure from the get-go. Like it's going to really transform
It's very
the way we
disruptive.
build software. Yeah, and I mean, a lot of people are zeroing in on that too. I think like Snowflake and Databricks and Amazon and Microsoft are all kind of building similar models right now. So they're definitely going to feel like pressure, I think, to compete in that space as time goes on. But as of today, they're pretty far out ahead of that.
What about Fabric?
Fabric's crazy, yeah. So it's traditionally been, it's still kind of under development. Like it's a new product. It replaces some of the stuff people were doing in Synapse back in the day. And so as such, it's got probably a little ways to go before it hits full maturity. Although they are making a lot of progress on like releasing new features we need to bring that into production. But it's definitely going to be a competitive offering. You can layer in like Power BI and Power Apps on top of it as well. So it kind of gives you like a unified way to deal with all your data assets in Azure and then build apps on top of that. So they definitely have a similar architecture roadmap. I think where the rubber hits the road is the differences in experience and quality. Like I guess good comparisons are like Teams versus Google Meets versus Slack, etc. There's various degrees of quality in the execution across there, and depending on what your needs are, you may need a scalpel and not the sledge, like the dull knife. So I think competition is good ultimately. Like it's going to open up a bigger market as people start to like. Let's just imagine tomorrow, every company on the face of the earth decides we need to stop with this old SaaS 1.0 model. We need to move to the 2.0 model, and here are our options. We've got Databricks over here. We've got Palantir over here. We've got Microsoft over here. We've got Amazon over here. They might not all choose Palantir, but a hell of a lot more are going to choose Palantir than if it's the only company pitching that model and the only company that's bringing that model to market. I think, it's like that rising tide lifts all boats. I think Fabric's ultimately good for Palantir, and so are all these other companies. It's just pushing the industry towards a different architecture they don't have already. Yeah.
I think people are freaking out about this because when we say, oh, we went from a quasi-monopolistic structure into a duopolistic market. Mother lover, a duopolistic market is still a hell of a lot of money.
Yeah. I mean, I look more at how big is the market? Is the
It's
pie
a
getting
massive
bigger?
market.
Yeah. I mean, that's something you learn when you're around startups a long time. It's like, would you rather have the bigger pie or the bigger slice? And I'd rather have the bigger pie, I think, at the end of the day.
I want a bigger pie and a bigger slice.
Yeah, well, there you go. There you go. You want it all.
So,
there you go.
Can you talk to us a little bit, Coastrap, while we have you here for your lunch break? A little bit, you put out that video, which I think was phenomenal. A little bit for, there's almost 6,000 people here in the chat.
Nice.
Most of them are not from the world that you operate in, and Dom operates in. You guys speak the same language. I mean, Dom and you. Can you bring it down to explain to me like I'm a 10-year-old, right? How important is AIP for Palantir business, and how innovative it is compared to tools that we have right now? Yeah.
I mean, I think at the end of the day, the trick for any technology is making it accessible to the masses, right? And if something is hard to use and it's restricted to highly trained people who need to not only be very, very acute and smart about the application, but also in just the interface, the actual tool set, It's almost like you need 2 degrees. You need like 1 degree in the theory and another degree in the practice. That technology can't be widely adopted, right? Like that is something that by definition reaches a percentage of the total populace, right? To the extent you can offer the same technology and bring that barrier to entry down, well, that opens up this massive pool, right? And you can scale that. And I think with AIP, what you're seeing is it makes AI accessible to the average business user, which unless you have a tool like AIP that can make prompt engineering and make the ability to teach an LLM how to gain access to your data and analyze it and put that together into an agentic workflow in a visual way, unless you have those things, which are really limited to is software engineers who know how to use highly, tuned instruments. And that's always going to create this bottleneck, this funnel, right? And so that hurts our ability to use this technology at scale, whether you're talking Fortune 500s or you're talking SMB. Having the accessibility built into the platform is going to drive adoption naturally, and it's really what's going to, I think there's a bigger problem we're solving here, which is like a lot of people now are starting to demand like, where's the proof that's in the pudding around AI? Is this hype or is this real? And a big portion of that is like, how do we get AI in the hands of the business users who actually probably use Excel today and make that accessible to them? Because otherwise, you're just going to have this bottleneck, and it's actually going to be really hard to live up to the hype. I mean, because it is massive, right? Like the amount of value that's being forecasted in terms of future value due to AI it's ridiculous what we're seeing. And unless software companies, remember, software companies are that last freaking mile, the last mile where the value is extracted out of the system. If that doesn't happen, and it doesn't happen relatively soon, you're going to start seeing a lot of volatility, I think, in this space as people get worried about like, is this hype? Is this real? And that's what AIP is. AIP is opening up this technology to the users who use Excel today to drive business decisions. Now we give them a tool that's easier to use probably than Excel to make decisions driven on data and AI. And that's why it matters. That's the so what. And that's why everyone's trying to get there, man. It's not just Palantir. Like everyone's trying to make a platform that's that accessible.
I just put the results in that link there. They're all fully posted.
Fully posted?
Yep.
Gentlemen,
Okay,
I didn't
Can you-
realize. I thought this was a Palantir earnings, not a good looks convention. But hello, good afternoon.
What up, Matt?
Very
How's it going,
good.
man?
I'm just surprised. I'm just looking through the numbers. This is absolutely insane. I did not expect over 20% year-over-year growth. That's pretty wild.
Dom, can you send me the link on X? Because I can't click it
Yeah.
here.
Yeah.
Matt, since you came in here, first of all, welcome.
Appreciate
So
that.
I'm gonna we're doing like a panel here. So as we pull up the results, I'm gonna ask you a question since you're the last to step in. Euphoria leading into the call, right? That euphoria meets a beat across the board, a significant beat, but the size of the euphoria was too big for the size of the beat. Market pulls back. Talk us through the dynamics of what just happened of the past 24 hours.
No, I think people are still expecting the moon. I think in reality, it's going to be something that it'll pendulum swing between $30 and back down to $23, and then it'll go next quarter to 33, and then pendulum swing back down to 25. What really matters is, especially depending on what kind of investor you are, is the long term for me, and that's how I've always kind of looked at it. I've been an investor in Palantir now since direct listing day, and I've been fortunate to be able to hold on to my shares and continue to add. And I think a lot of people have come and gone out of Palantir due to the volatility of it. And I think, what you've been able to see is, yes, there was the euphoria of 2021, when the whole GameStop thing happened. But if you kind of remove that and normalize it for everything else that's kind of happened since, say, that bottoming out of 2021 and 2022 timeframe, you're on this great trend upwards that is matching kind of the point where we've hit profitability as an organization and good cash flows starting to add to the bottom line of Palantir's sort of group earnings. And it's only going to continue to get better. Cash flow margins are continuing to get better. Ops margins are continuing to get better. This is going to be something that, even if it only grows only at 20% for the next few years, you're going to have billions upon billions of dollars of free cash with low capital expenditure to no capital expenditure to keep the business going. due to the great margins that this company already has, what are they going to do? They either have to buy other things, which will be accretive to the bottom line, or buy back shares, which will be accretive for an earnings per share basis. I mean, there's so many possibilities because you have no debt and you're continuing to be in a space where it's evolving, not just over the past, say, 20 years since they've been around, but will continue to evolve over the next 20 to 30 years. And I think this will be a continued dominant corporation going into that sort of time frame that I think a lot of people undervalue. And I think I'm very bullish on this bad boy for the next 10 to 20 years.
I had a few conversations with some smart people who may or may not be in this panel, and we share your enthusiasm and more, Matt. So I just want to walk through the earnings real quick. So net income, 17% margin. We got EPS 0.08, which was, I thought it was the estimate, but it's a slight beat. 21% revenue growth year to year. And U.S. commercial grew 40%, 150 mil. Commercial 27%, government 16%. Oh, nice numbers. Customer count grew 42%, which is quicker than the 35 they had in the previous quarter. Cash from ops 130, 20% margin. Everything looks good. Yeah, it's a nice clean beat, nothing crazy. As we said, right? It's a nice clean beat. What about the outlook? Q2 revenue 650-53, and income operations 213. Full year pretty much the same. 45% U.S. commercial growth, raising adjusted income from operations to 868 to 880. And stay GAAP profitable. Yeah, so everything looks good. So Greg, I'm gonna bring the panel back to you since we just talked to Matt. How much time you got more? So I don't want to miss you before you leave.
Oh, I got like 10 minutes, man.
Okay, cool. So Greg, just for 2 minutes for you, you're looking at so guys, for you in the panel, that Greg is here he's wearing his hat as a trader, technical trader. So Greg, looking at these results, right, and given what happened with the market, so now it happened already. Euphoria met a beat. Euphoria was too big, and the market pulled back. How do you see the next 24 hours play out for the stock, given what just happened?
Very hard to discern. Again, I wouldn't try to be fair. To be absolutely fair, I cannot discern and extrapolate any technicals right now. I would rather wait for tomorrow and see how the market truly feels about this. But for now, since some of the technicals will apply no matter what, current resistance is between, let's call it 26, because 25.99, let's call it at 26. The upper limit above that is 27.18, which I doubt will be broken because of the lack of momentum we have, if at all, even if it will be picked up tomorrow, because people will, let's buy the dip, which can happen. And if the institutions will recognize that momentum, will definitely abuse it just as they did today. But the current perception, as I said in my original video, is the range of 20, probably going to be retested many times over, drop to 16 with the market breaking even lower, and then I will have to get back to you with the numbers. But right now it's quite a wide range, but the lowest is around the 16, but not going to happen tomorrow. We're probably going to dwell around the 20s for a while. It's going to be retested multiple times. So those are the certain elements. By the way, sadly enough, as we speak, 2270-ish area.
So, guys, there's 5,400 people in the stream. Make sure you follow all the panelists. Go to their names, search them on YouTube, on social media, and go give them a follow. Quick shout out to Andrew for the $5 super chat. Thank you, Andrew. Appreciate it, buddy. We have a esteemed colleague here in the panel. Micah Stocks is here to save us from the depth of despair. Talk to us. What happened? Make us feel better, Micah.
First of all, hi everyone. Thanks for having me, Tom and the gang. I think it's quite predictable. Let's start from the results. The results were
Can I plug you here for a second?
Palantir again with another stellar quarter.
I want to plug you here for a second. I just want to say, before, when this whole thing was being planned hours ago, around lunchtime, you told me this is going to happen.
Guys, you have technical analysts here on this call, so I'm not going to repeat what they said. Someone front
And
run
these technical
reports
analysts will
and
say that they admire you, and absolutely, you, sir, are amazing. You guys all should follow Micah. Micah is brilliant. Okay, I'm a huge fan of his. Just gonna say that out loud.
Now it's gonna go to his head. Live him.
It's not my stream, guys. I'm here as a guest. I just finished the live stream. I'm here.
I
as a
had to
guest.
say that. Sorry.
So someone front ran these earnings. The stock went up 25% from its last support. There's clear support. It avoided the head and shoulders pattern that might have been able to break that. And I assume someone here that has technical analysis capabilities already showed you the charts and everything. There was a potential head and shoulders. It avoided it. It went up by 25%, if I'm not mistaken. And today it's taking a breather. Look, if the results were even better, might have not gone down 5 to 6% what it's down now. But again, the company is performing on its guidance. It's performing on all the metrics. I think that this is not financial advice. From my perspective, any, correction here is a Bible one. Whether it's tomorrow or in 2-3 days or 5 days, or it doesn't matter. There's a huge support that you can probably, there's someone here with the chart that can show it. At least from my perspective, nothing to worry about. But Tom, I told you that a few hours ago anyway, so it's not a surprise.
I am 100% witness that you told me before lunchtime, hey, mother lover, this is what's going to happen. Watch. And I was like, okay, let's see.
I also told you that I made a $40,000 membership
don't
to
go
Equinox.
There. That's the stupid. it's I'm about to punch through a wall. Okay. So, anyways, no offense to Equinox. Okay. Code. Before you go, so I want to bring it back to you. So, Micah, just about the technicals, about what I 100% agree with everything you said. Could you explain to us? You know this platform from inside out. You work on this platform. You're affiliated with the company. You're the best technical guy on the platform. Tell us, why are you so excited about this company, and what's making you basically allocate? I would say, I know how much, but I'm going to say allocate significant amounts of your investment into Palantir.
Well, it's just like my background, right? So like I predominantly have been a technology executive, and a big part of what I did was run platform engineering teams. So we invested millions and millions of dollars into trying to build products like what Palantir created in Foundry. And that has only accelerated, I think, as everyone is rushing to figure out, well, how do we layer in AI on top of this infrastructure? Everyone's sort of converging on the same patterns that Palantir has already built in, right? And we know how hard it is to build something like that. You're talking like a 10-year, multi-billion-dollar investment if you're going to try and replicate something on the scale of Foundry. And so when I saw it, I was like, okay, well, why is anyone even bothering trying to build these things by cobbling together all these various Lego blocks from various software providers when we already have a platform that's like a reference architecture and implementation for what we need, right? And so I was like, okay, that's like someone bringing you a version of AWS before anyone knew that they needed it, right? And you get early access to it, you get to learn it, you get to like actually build your own reference implementations that other people are going to use. So like I'm all in on it because I know the amount of complexity involved in building something like this, how inadequate a lot of the current tools are when you really get down to it. And the fact that it works, right? It's like I get to deliver solutions on it, and at very large companies, and I can see it working. So like, yeah, I mean, it's going to take a little while, I think, for the world and the market to sort of catch up with some of these things. I work for startups, right? Like traditionally, I'm on the bleeding edge of a lot of these things, and it takes a while for the rest of the world to kind of realize what tools they're going to need. And so like we're going to see the world, I think, eventually catch up. And again, you got a lot of different companies building Foundry-like products now. And a lot of people get nervous about that. I get excited because I'm like, hey, the more everyone's aligning on this architecture implementation, these tools, the better it is for everyone, because we stop having these debates, especially in the build versus buy category, and everyone kind of aligns on industry best practices and solutions. Eventually, I think that's going to happen with Palantir as well. So just stay tuned, and I think you'll see more and more this year, like companies, whether they're using Palantir or other products, more and more companies aligning with this type of solution.
I'm going to send the same question back to you, Mary Ice.
Yeah, so for those people that may or may not know, I do work for BP, which is one of the folks that really started off U.S. commercial growth within Palantir. And so I've been fortunate to use the product now for 5-6 years. And to see and hear what Code has talked about, being somebody that has been, I guess, forward-looking from a digital transformation perspective, and seeing that within our own organization since I started back there in 2012, 2013, to when we actually linked up with Palantir, all you saw was churn before we got to Palantir and really linking up with Foundry and implementing that as an operating system into our core business. And so to kind of see that transformation of literally everyone just trying all these different products, failing and not getting anywhere, spending loads of time, money to try to get some of these systems up and running. So then when we actually transitioned into using Palantir in 2017, and more specifically the Foundry platform, it actually it kind of working, and having a feasible product that really organized us from top to bottom and globally was a huge step change. So I think that this has a lot of life left. I think there's a lot of implications that have yet to be discovered throughout many different industries, as we've seen since the direct listing. I think they started off in like 18 or so industries. They've exploded to literally countless industries at this point across different value chains. And this is something that once you realize and implement it into your own business, it just makes sense, right? It really teaches you, working with the guys and the forward development engineers really get you to think about data in a completely different manner, and really just helps you understand, how uneducated a lot of us are with respect to data structuring, and really to get data to flow in the appropriate manner, and also interacting with that data and manipulating it in an appropriate manner to make sensible analytics out of it. And it really took an education and culture shift within our organization of like 6 months for it really to kind of take hold. And it's caught on like wildfire, maybe not to the extent that I wish, because we still try to diversify in terms of some of the tools, but our Palantir tools have been absolutely phenomenal, and we're deleting old legacy processes and systems by implementing them into the Palantir and creating customized software on top of our Foundry application, or we're creating Foundry applications that literally feed directly from our data that we're pretty much getting offshore, or all of our wells that we produce on a day-to-day basis. So it eliminates a lot of steps, and it really does a good job. And I'm really curious to see how it continues to get implemented, specifically when AIP and the guide rails associated with that across many different industries, how that could be applicable to many different folks. Because a lot of times all we do is we might have a little minute change of how we look at data or implement data, but a lot of the things, the work that we do on a day-to-day basis, sending emails, working through spreadsheets, working through problems, analyzing what's being said, a lot of that's the same. And so I anticipate it's going to catch on like wildfire. Like they just stated in the earnings report, over 900 boot camps at this point have been done, and we haven't even been a year in. We're 2 months shy of a year in to AIP launch. So anyway, I'm just rambling at this point, but wanted to say thank you. I have to go to a Rocket Lab earnings call, but
right on, Matt.
Tom, I think before you go over the highlights, because I need to drop off in a second, one thing that investors need to remember about Palantir, at least from my perspective, there's basically two Palantirs. There's Palantir, at least from my perspective, there's Palantir up until 2-3 years ago, and there's Palantir from the last 2-3 years. Palantir up until 2-3 years ago was a project-based military or whatever we'll call it company, heavy on creating a specific platform for a specific customer, right? Very project-oriented, very project-based, deepening their knowledge in AI, but that was up until 2-3 years ago. Then 2-3, I'm talking from a product perspective, then we'll go to the market. From a product perspective, 2-3 years ago, they understood that they need to package it in a way that they can sell it commercially. And they started working with commercial customers. Those are the ones that everyone here is mentioning that did the workshops. From a market, and now basically there are two companies. There's Palantir, let's call it government, military, all that. And there's Palantir commercial. That's how it's kind of positioned, at least again, from my perspective. From a market perspective, there also has been two Palantirs, the Palantir of the SPAC that went crazy, a meme stock. And now in the last year or two, there's Palantir, an AI company that needs to shake off the fact that people still think that it's a project-based company and listen more to Code and Maddie here that say, look, people love using their software. So I think it's also that, and that's why the stock is behaving still erratic and not going up slowly like a regular, or actually no AI stock is going right now logically, so it's not even a good comparison, but that's why it's acting the way it is. But again, I think it's, although it's a 21 or 22-year-old company, I think it's a 2-year-old or 5-year-old company, basically. And that's how
we made that point. You're right.
Yeah,
we talked about it. There's the startup Palantir and then there's the OG Palantir. But I want to, since you worked in the SaaS sales, Micah and Dom as well, I want to ask you guys both a question. By the way, Code, if you got to go, you can go. Don't feel bad.
Yeah, let me just close it. I do got to go. I'm getting.
So you have the floor since you got to go.
Yeah, I would agree with that statement. They're really a 2-year-old, 5-year-old company. In terms of the current product offering. Also, like to Matt's point about like you can retire a lot of things as you start to migrate over to Foundry. It tends to cannibalize other workloads that you don't need anymore. So like a lot of the hesitancy companies have regarding cost or whatever, a lot of that gets mitigated by the fact that like, well, there's all these other things that eventually get spun down and cannibalized. And the other thing I would say that one of the reasons I'm so excited about AIP is like, one of the things we have to find a way to do is make switching costs on models 100% zero, right? Like, because they're just commodities at this point. The foundation models and these things, like every month you're going to see a different one performing better and taking the lead or whatever. There's basically no value in those. And as a company, if you hitch your wagon too much to one platform or one model, what you're going to miss out on all the features that come out in the new one, right? And like a good example of that's like Claude 3, when it came out, it had superior data extraction capabilities. Well, what do enterprises do a heck of a lot of? Data extraction on top of documents, right? So like if you're too aligned with one model and you can't take advantage of those new features for months, you're going to be at a competitive disadvantage. And so one of the great things that Palantir does is make the switching costs nothing. I can switch between the models I'm using inside AIP at will. I even have automatic evaluation tests that let me know which model's performing better than the other one at particular tasks, and I can dynamically deploy with that configuration. So like they are really allowing enterprises to extract like maximum value out of AI, and that would be something I would pay really close attention to, because too many of the other companies I think have their own models that they're sort of putting at the center of the commercial offering, and it's the exact kind of opposite, right? They're like trying to lock you into that model and that platform. So I think it's very unique, and maybe the only other people in that space might be companies like Databricks in the future, where they're really able to offer that zero friction, zero cost thing. But I gotta go, guys. It's awesome to chat. And Tom, we gotta hook up.
I'll call you offline. I got your number. I got your number.
See you guys.
Okay, later, buddy.
Cheers.
So going back to my question, I want to bring a question to Dom and Mike. Matt, you're on the clock as well, or I got you here for a few more minutes?
Yeah, no, I do have a Rocket Lab call that I do need to join as well.
Okay, so guys, you have 2 minutes both between yourselves. So Dom and Mike, I want to ask you guys a question here. You both former executives in SaaS business development. So how crazy is this number right here, guys? 87 deals worth over $1 million. U.S. commercial count grew 70% year over year. For a company of Palantir's characteristics. And Dom, you can go first. Micah, you can go second.
It's outstanding. It's A plus what people strive for. Something that I've so far looked at, two things that really jump out. I mean, I'm not through the whole deck. Is look at on slide 12. 74% year over year U.S. commercial remaining deal value. That number was 32% in Q4. Why is that so important? That is supportive of the business model that they're pricing per compute usage and adoption. You're seeing more and more of adoption of the platform inside of customers' environments. That makes it stickier. That makes the switching costs harder. It makes it where it truly is the core operating system for those businesses. And then the second part of that is you can see that from some of the quotes that these COOs and CTOs are delivering about what these boot camp experiences are who've never seen Palantir. The COO of Lennar, which is one of the largest house builder companies, you all have changed the perception of technology delivery. This is absolutely game changing. General Mills, a cereal box company, we're saving about 14 million annually, and it's only deployed to a part of our network. Keep in mind a part, right? We talked about how they solve a problem and then they expand. And then with Lowe's, in 4 months, we went from proof of concept to production. A company of that size to do that is phenomenal.
And by the way, the only problem with Dom that I can think of is he's a Cowboys fan, but that's easily fixable. Other than that, I agree.
Hey, I have to have something to be sad about. As long as the stock's going up, I'm happy.
I think, Dom, to add to everything, every smart thing you said, because it's a 21-year-old company, that is their only current challenge in the market. They have customers, they have very big customers, but they're carrying a case that's filled with history and maybe even a bit of misunderstanding of the company. It will take some time. It will take a few quarters, and we need to say it out loud. Again, it's not my challenge. I'm not managing their go-to-market, but I think their biggest challenge is to articulate exactly what every professional person that's involved in AI knows and understands, that they have a very strong AI and machine learning and models and everything. Once that is, and that just takes time. Because it's not a new company. If it was a startup from Silicon Valley, that was established 3 years ago, their valuation would be a lot higher and we wouldn't be in this kind of discussion, which again, I don't think it's a bad discussion. They had a very good quarter. Stock went up 25% before the earnings. It's correcting. It's something that markets do. People are taking money home after doing 25% in 2 weeks. Sounds like a very good trade.
The one thing I think you guys both would appreciate, Dom and Micah, is when I spoke to Sham, I'm going to humble brag when I spoke to Sham. I don't speak to him on a daily. It happened once or twice. But when I had an opportunity to chat with him offline a little bit, what he told me, which made me excited, because I'm not a sales guy. What he told me essentially that they've revolutionized the way they sell SaaS. Basically said, look, people build a product and then they try to shove them down the throat of the customers and fit it somehow. He said, what we do basically, we have a sandbox. We come in, we see what you need, and then you already get a custom tailored product for your business. So we build it from the ground up. So we don't have to tailor everything just to make it fit. Everything fits by definition. And it's a huge, huge thing. The only problem we had, what Sham told me, is like, we used to have a point of contact problem because the POC was usually motivated not to help us go through the door because it would mean that what he spent money on was basically useless. But now the cost of not listening to us will be greater than the cost of getting embarrassed of sunk costs. And now they're begging us to come in and do the demos.
It's just going to take time. It's not going to be a lot of time, but it's going to take time. If they would have been established 3, 4, 5 years ago out of Silicon Valley, they would be the new diamond in the market. Everyone would like to say they work with Palantir because and we all know Alex Karp, and we all know that they moved to Colorado, and we all know the history. That's why it's going to take time. That's all. I think for retail investors, and this is not financial advice, this time is the opportunity to build exactly what your position, what you think your position should be, your position size. And again, it's not financial advice. Because if I'm correct in the way I'm seeing it, this is really, really the first, maybe the second inning, not more than that. Although, again, it's a 21 or 22-year-old company, just because it's a new company than 3 years ago.
There's only one thing I found in the investor deck that I don't like. And it's that I don't see anywhere where it shows the top 20 customers and their growth. So that was the first time since I've been covering the
They
company.
never put it in the deck, Dom. It's always in the 10Qs.
No, I'm looking at last quarter's deck, and it was
No,
right.
I found it.
Yeah.
No, yeah, I'll show you. It's they have like they always talk about top 20 customers. That's how I saw it.
Oh yeah, I want to see that number, but
Yeah.
they outpaced everything I expected from a commercial and total customer count growth, which based on their design and business model just speaks volumes. Like Micah said, it's going to take time, but what's really interesting in the last 5 or 6 quarters, look at how precise they are on their forecast and knowing how much they're going to call and exceed. When you look at their revenue obligations and how they've grown and they know what revenue is still there to be realized, it's consistent. It's becoming more mature of a company that it's going to be very unlikely that they have a miss.
No, but that means they need a new investor relations. Sorry to be the HR in the room, but look at Apple from Thursday night, right? I'll give that as an example and then the analogy, right? Apple for the last 3 months lowered and lowered and lowered and lowered their guidance to a point where everyone was surprised Thursday night that Apple beat on earnings and revenue. Basically, they didn't beat on anything. The revenue is going down, the company's not growing, but they lowered it in a way that everyone was surprised. Not a lot of companies have investor relations like Apple. Like Tesla doesn't, right? They tell analysts, do whatever you want, and then we'll screw the earnings and everything would be okay, right? So that's the other side of the pendulum. Palantir, as part of growing up, needs to manage that. Why? Because we are in a market that over 75% of the companies beat both on earnings and on revenue. That's a statistic. If they come aligned, that's a miss. So you might say,
that's fair.
But why? They said that's what they want to do, and that's what they did. And you're right, but the market doesn't work that way.
That's fair.
Look, there's a problem with Palantir. One problem that just the way it is what it is. And then, Matt, I'm going to move it over to you. When you come out and you say we're better than everybody else, we know how to do anything better. We're going to move to Colorado. We're going to do things different, et cetera, et cetera. You got that burden is on your neck. And you got to be number one at everything. You got to beat massively. You have to go crazy, and that's you putting a target on your back. And when you don't deliver in a way that basically says, "Hey, I'm way better than everybody else," people are going to get upset. And the market's going to react properly. Matt, before you go, any words of wisdom from you about what's going on here? Price action seems to be a little bit more relaxed, but we're not really watching that.
Yeah, it's 1,200. % customer growth in U.S. commercial over the past 3 years. I think that's the bottom row, middle block there on the screen that you have. I think that should not be discounted at all. You see the 69% U.S. commercial count growth year over year as well. You have to think, how long it takes Palantir customers to truly start generating to the top line growth. It takes at least 18 to 24 months before you start seeing meaningful growth. So we're just getting to a point where you have this new tranche of customers that have just come in and is continuing to grow at a 69% year over year growth rate. And it's really starting to kind of hit a second gear just for U.S. commercial. And I want to kind of reiterate what one of the things that Micah said earlier. Apologies if I butchered your name, but it's the fact that the company for the first 19 years of its existence was really just looking at honing in on, government contracts and really focusing on perfecting their foundry and Gotham sort of products. And it wasn't really until, and it was more so focused towards Gotham, to be honest with you. And it wasn't until they started working with BP and several other select companies in 2016, 2017, when they actually kicked off Foundry. And you've seen the growth of the organization in terms of revenue since then. You've seen the products of Apollo released. You've seen AIP just released. So this company, I think people that are thinking about where it is today and the products that are out today are discounting that these guys every 18 to 24 months will release another groundbreaking product that will have its own cohort of customers, its own cohort of revenue streams coming from it, and will only continue to expand on its, I'd say, dominant position within the market of being a 21st century technology company and software company. And so that's just the way I look at this. I think 10 years down the road, if you continue to hear Palantir as dominant as they are already in topics of communication, at the government level, at the commercial scale level, you already hear, everyone chattering about it today. Just wait 10 years from now when they release 2 or 3 more products, and you're just going to be, I think, flabbergasted. It's going to be like looking at Netflix in 2012 and wondering why you didn't invest. Yeah. I just think that it's something that's inevitable. And you think about it, people might not necessarily agree at how fast or whatever Palantir is growing. They might say, why isn't it growing at 40%, whatever. The company has 0 debt, $4 billion, as you'll see in the earnings presentation, of cash on hand. And the company just is a cash flow machine, and it will continue to be a cash flow machine even more so going into the future. So, I'm long, I'm not selling a share. I've never sold a share. And I've been in the company since as a shareholder for going on 4 years, and as a stakeholder for over 6-7 years, and I'll continue to do so. I appreciate you guys letting me hang out with you guys. I'm gonna go log into my Rocket Lab.
We appreciate you, buddy. Thank you for stopping by.
Bye. You didn't butcher my name. You're good. One upside, and then I'll drop as well. When you look at the chart,
if you're gonna drop, then you gotta have an upside.
No, I'll give you guys the upside, and then I'll drop. If I keep the upside, then when you look at the chart, it's clear that being included in the S&P is not in the price yet. So that's, at least from my perspective, it's good. That I think there's still more upside for short term once a decision, and I believe in 2024 they will be included, because there's no, at least from what I've seen, there's no financial reason not to include them, unless Alex Carr pissed someone off, but that's the only reason. So it's kind of a chain of events. If we'll start seeing the stock being bought aggressively, know that someone knows something as usual. But this correction actually shows me that people still don't count that into the stock price, which is good. See, I gave you an upside, Tom.
Yeah, and I'll say last upside is net dollar retention grew from 108 to 111. Every single metric grew. Operating margin now is 36%. It keeps growing and growing and growing.
Yep.
Very good indicators long term.
34 last quarter, 108 last quarter.
Amazing.
NDR is up.
Tom, thank you very much for having me.
Okay, dude. So before you go, can I plug your channel?
Sorry?
So before you go, I'll plug your X account, which
I have a lot of channels. I have one channel in Hebrew, one channel in English. The English one is posting once a week, weekly summaries of the news that happened this week. If you want to watch it, that's fine. If you want to learn Hebrew, then there's a lot more content on the Hebrew channel. You choose. It's called Stock Talk with Micah Stocks. That's the English one, and the Hebrew one, Micah.stocks. Thank you, everyone, for having me. Tom, thank you. Dom,
no, thank you. Appreciate
again. And Greg as well. Bye-bye.
Okay, I got to run too, Tom, but thank you so much for having me on and getting to chat with everyone. I think the best is yet to come, and I'm excited at the pullback opportunity we might have here.
It seems to be closing, by the way. I'll let Greg do his little thing here, and then we'll go to the earnings call. Greg,
there's not much to say. You can turn on the screen. You can see we stabilized around 350 broke below. Again, the sort of retesting previous. All these supports are rather weak. What you guys need to be more attentive to are sort of the longer targets, the things that I mentioned. We mentioned the community. If it's the 2907, you can call it 2930 area.
What's pulling it back up right now from
If it's
10% to 5%? So it was minus 10, now it's minus 5.
again, because we're talking about these hours, this is not retail. This is just
Low volume.
robotic price action. Nothing out of the ordinary, just regular. I often I sort of compare this to how a shark sleeps. A shark needs to be moving to sleep. The market doesn't until it's completely asleep, and even then we have the continuous indices that go overnight. So I mean, essentially, it's just normal, nothing out of the ordinary.
Okay, fair enough. Dom, before you go, you want to go over the presentation real quick, the highlights?
Yeah, sure. Yeah.
So since you went over it already, right? I'm going to pull it up, hopefully, here on the screen. And tell me which pages you want me to highlight since you already had the opportunity to see it. So we can go from the top or... This slide, obviously, is insane. Is absolutely insane.
Yeah, I mean,
the
biggest box that I'm excited about is that top right, because that just shows me that they're getting more departments at each customer using it and knowing their billing model that's only going to keep going up. That's not going to decline.
That's live money. That's 74%. It's actual money.
Yeah.
They haven't just built it yet. Yeah. Absolutely.
Yeah. So
what else do you want to show? Do you want us to look at?
And then also, I mean, just the consistency on U.S. commercial overall. I mean, you look at so they did 136 deals. That's 6 up from the last quarter, but 94% year over year. So they just switched how they measured it because they didn't want to show that it was weak sequentially. 14% quarter over quarter sequential commercial revenue. I mean, it's hard to do double-digit sequential and year over year. So
yeah,
really good. Let's see what other. If you want to see the net dollar retention, that's on slide 26 at the bottom. It's in fine print. There's that.
I said it today when I was making my Palantir preview video.
Right, you wanted over 110.
Yeah. Oh, you watched it? Oh my god!
I watch everything you put out, man.
Because like when people watch my video, I still get excited. I never take it for granted.
Yeah,
like,
no,
it never goes away. So when somebody quotes from my video, I was like, it really makes my day. It's.
I mean, everything was great. And rule of 40. I mean, look at slide 15. You know, they're not, you know, the highest in the world, but it's the trajectory you want to look at. That's what you want to pay attention to. I guess I'm most excited about these earnings is just that it's still giving us time to keep piling in because they're steady growing. And what was the overall customer growth slide? That was the big beat that I was shocked about. Slide 20, which was the commercial count growth.
That is wild.
That is
wild. Yeah.
I mean,
that's quarter over quarter. That 19%.
19% quarter over quarter.
That's insane.
And then slide 22, just 27 deals over 5 million and 15 over 10 million. I mean, that's just showing you they're still getting enterprise customers. Yes, they're getting more commercial customers that are smaller, but overall they're still landing big whales. And then I think my favorite slide was 21. I mean, just look at that growth. I mean, that's just insane customer growth. And the reason why I think this is so important,
you grow customers for a living for SaaS.
Yeah. The other thing that's so unique is just their business and pricing model. Not everyone in the company gets Palantir right from day one. They're starting with certain departments and certain problems. As it keeps building, guess what? You need more CPU usage. You need more licenses. So that's what's exciting is the 554. And you think about what they're going to spend when they're using Palantir for a majority of their company.
I think the call has started.
Oh, let's go. I'll talk to you then.
No, I don't think it started yet. I think it's about to start because there's no volume on my end. Greg, can you check on your end if you have audio?
I can. I don't have it on because I didn't think that would be.
Dom, you want to check for a second? I don't think they started yet. I think they've turned it on, but I don't think it started. You're not staying for the full call, right, Dom?
No, I can stay for the call. I was gonna just switch over to the call. I didn't know you were doing a session on the actual call.
Yeah, we have no life.
Exactly what Tom said. I agree
We have no life.
1000%.
We have no life. By the way, I hit like for the Palantir unlisted stream, which means nothing. I still did it.
Likewise.
It's an unlisted stream. It's not
No,
gonna get
it's
promoted.
nothing. We're still.
Oh,
Oh, here it is. Here it is.
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our first quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our second quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We started the year exceedingly strong, with revenue of $634 million, an increase of 21% year over year, driven by the momentum of AIP and our continued strong performance in U.S. commercial. Our results also highlight the growing strength of our U.S. government business and our enduring mission-critical work. The continued interest in AIP is loud and clear in the conversations I'm having across our customer base. We've shared our plans to capture the market with AIP, and our results show that our strategy is not only succeeding, it is accelerating. While still early days, our focus is on building the foundations of a long-term business. We intend to relentlessly continue landing new customers and subsequently expanding those engagements as our products gain traction and have meaningful impact within enterprises. Not only are we increasing the volume of new customers, but I'm pleased with our ability to grow these new customers as well. With regards to landing new customers, we've sustained our high volume of boot camps with over 915 organizations participating to date to meet inbound demand. We are also seeing substantial deal cycle compression. As one example, a leading utility company signed a seven-figure deal just 5 days after completing a boot camp. Another customer immediately signed a paid engagement after just 1 day of their multi-day boot camp, and then converted to a seven-figure deal 3 weeks later. We expect the favorable unit economics and higher throughput to continue to accelerate our business. U.S. commercial is where we're seeing the greatest transformation. While Q1 is seasonally our slowest quarter, AIP adoption by new and existing customers helped drive notable growth in customer acquisition and revenue in our U.S. commercial business. In Q1, we added 41 net new customers in U.S. commercial. Our customer count increased 69% year over year and 19% quarter over quarter, compared to 8% quarter over quarter growth in Q1 2023. Excluding strategic investments, our U.S. commercial revenue soared by 68% year over year and 22% quarter over quarter. New customers span a variety of industries, as AIP's applications seem endless. From the largest independent bottling company in the U.S. to a leading energy and infrastructure company and a multinational airline. In Q1, our US commercial business had customers from 56 of the 74 GICS industries. As we're landing new customers, we're also seeing those customers expanding their work with us. Across my conversations with customers, I'm seeing the recurring theme of them asking me how they can do more faster with enterprise transformations driven by AIP. We're showing them how they can move their AI strategy beyond chat. Existing customers such as Lowe's, Cleveland Clinic, and General Mills, among others, are realizing the extensive possibilities of AIP within their own enterprises and increasing their scope accordingly. Lowe's accelerated its engagement from a starting point of no AI to utilizing production-level AI for over 1,000 customer service agents, resulting in a 75% reduction in overdue tasks. As one of its directors noted, quote, "We achieved this in just 4 months and onboarded 1,000 users within 3 weeks of rollout." Cleveland Clinic committed to a 10-year expansion deal to deploy more broadly across its hospitals. General Mills expanded the scope of its work further last quarter, as its senior director noted, quote, "We're saving on average about $14 million annually, and it's really only deployed to part of our network as we speak." We're seeing rapid expansions within key customer accounts. For example, a Fortune 500 industrials company signed a 3-year expansion deal, which increased the annual revenue run rate of our work with them nearly 5-fold compared to our initial engagement with them in 2022. A Fortune 100 retail company started a pilot in Q2 2023, expanded to a use case conversion in August, then expanded its work to a $12 million ACV enterprise engagement last quarter. These are just a few examples. More and more customers are expanding their work with us due to AIP and the incredible traction our software has within their organizations. Turning to our US government business, our revenue continued to accelerate last quarter, increasing 8% quarter over quarter versus 3% quarter over quarter in Q4, with our products every day having critical impact on current world events. We see continued demand for Mission Manager and positive reception to First Breakfast. Last quarter, we were honored the US Army awarded Palantir over $178 million to be the sole prime contractor to build a next-generation targeting node under the Titan program. This marks the first time that a software company has won a prime contract for a hardware system and exemplifies Palantir's position as the software prime, opening the door to vast new opportunities. It is with immense reverence that we approach building and maturing our revolutionary capabilities for our warfighters. In our international government business, we are continuing to ramp up the critical work for delivery of the UK NHS Federated Data Platform, as well as providing defense capabilities to allied partners around the world. Looking at our business and its impact broadly, I'm invigorated about the year ahead. We have never had more conviction about AIP and the power of our software, as well as our continued efforts supporting the most critical missions around the globe. I'll now turn it over to Sham.
Thanks, Ryan. The clear signal from AIP bootcamps is that AI is for builders. So many anecdotes and quotes from customers, all reinforcing the same point. They are getting more done in a day or two in AIP than in a quarter or two without. We have pioneered the approach to getting beyond chat and unlocking the value of LLMs in the enterprise, taking inherently unstructured inputs that are flying around the enterprise, be it emails, Slacks, PDFs, images, comments, audio, and turning them into structured actions and outputs. Taking an email from a customer requesting a different product mix and turning it into an actual inventory allocation in the ERP system of record. Taking a health claims denial and programmatically generating the documentation and supporting evidence from the clinical records and contracts. Automating P&C insurance claims processing, and even in government, using vision models to narrow candidate products driving foodborne outbreaks at CDC. And we have started rolling out Build with AIP, a series of developer and builder-oriented tutorials and reference implementations that enable builders to ramp quickly on the primitives and power of AIP in practical examples that unlock every employee at every customer. Our growth is being driven by the incredible dynamism of the US commercial market, and we believe the US government will follow. With this momentum, we have launched builder boot camps in the US government. The US Army recently issued a memo identifying 2 Palantir systems, AIDP and Army Vantage, as amongst the 5 total platforms approved for builders. The US Army's Artificial Intelligence Integration Center, AI2C, at Carnegie Mellon, leverages these platforms for half of their active projects and recently built an application for the 18th Airborne Corps with OSDK. Our DoD customer recently hosted a hackathon showing the value of the open Joint All-Domain Command and Control, or JADC2 SDK that we have been pioneering. One participant commented, "Nominating targets with Gaia Assist turns a 6-hour workflow into 10 seconds." We continue to invest in Mission Manager and will be extending it to the edge with our Edge X infrastructure in US government. Now customers can use their cloud instance as an integrated development environment for edge platforms, centrally build, test, and continuously deploy and manage multi-vendor Big Tent edge ecosystems. It covers everything from streaming pipelines, OSDK-backed applications, native Gotham applications, and third-party apps. We are excited with our team of rockstar partners to deliver on the US Army's Titan program. This marks the first time a software company has won a hardware contract, firmly establishing the role of the software prime. We believe the core of this software, Target Workbench, will be critical in every cockpit, every vehicle, and every ship. Finally, I'd like to acknowledge the eye-watering work of our service members and our allies in meeting the moment defending against the massive Iranian attack on Israel. The Gotham investments in JADC2 performed excellently, and we're building even more, even faster. I'll turn it over to Dave to take us through the numbers.
Thanks, Sean. Q1 was a strong start to the year. Revenue growth accelerated to 21% year over year in the first quarter, driven by momentum in AIP and our US commercial business, and a re-acceleration in our US government business. We delivered our 6th consecutive quarter of GAAP profitability, generating a record $106 million of GAAP net income in the first quarter. We also delivered our 5th consecutive quarter of GAAP operating profit, generating a record $81 million of GAAP operating income in the quarter. Adjusted operating margin expanded to 36% in the first quarter, continuing to highlight the strong unit economics of our business. The revenue and profitability outperformance drove a 3-point sequential increase to our Rule of 40 score from 54 in the fourth quarter of 2023 to 57 in the first quarter of 2024. This was the 3rd consecutive quarter of an expanding Rule of 40 score. Turning to our global top-line results. We generated $634 million in revenue in the first quarter, up 21% year over year and 4% sequentially, exceeding the high end of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, first quarter revenue grew 24% year over year and 4% sequentially. Customer count grew 42% year over year and 11% sequentially to 554 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $55 million per customer. Now moving to our commercial segment. First quarter commercial revenue grew 27% year over year and 5% sequentially to $299 million. Excluding the impact from strategic commercial contracts, first quarter commercial revenue grew 36% year over year and 4% sequentially. We had a very strong quarter of commercial bookings. First quarter commercial TCV booked was $505 million, representing 187% growth year over year. Our US commercial business continues to see unprecedented demand driven by momentum from AIP. First quarter US commercial revenue grew 40% year over year and 14% sequentially to $150 million, surpassing international commercial revenue for the first time. Excluding revenue from strategic commercial contracts, first quarter US commercial revenue grew 68% year over year and 22% sequentially. AIP is driving both new customer conversions and existing customer expansions in the US. In the first quarter, we booked $286 million of US commercial TCV, representing 131% growth year over year. Total remaining deal value in our US commercial business grew 74% year over year and 14% sequentially. Our US commercial customer count grew to 262 customers, reflecting 69% growth year over year and 19% growth sequentially. We generated $149 million in international commercial revenue in the first quarter, representing 16% growth year over year, but a 3% sequential decline as a result of continued headwinds in Europe and the revenue catch-up in Q4 that we noted last quarter. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $24 million in the quarter. We anticipate second quarter 2024 revenue from these customers to decline to between $7 to $9 million compared to $19 million in the second quarter of 2023. We continue to anticipate 2024 revenue from these customers to be approximately 2% of full year revenue. Shifting to our government segment. First quarter government revenue grew 16% year over year and 3% sequentially to $335 million. First quarter U.S. government revenue grew 12% year over year and 8% sequentially to $257 million. As Ryan noted, we're excited to be the sole prime contractor under the Titan program and will continue pursuing other defense opportunities. We believe we're well positioned to see growth in our U.S. government business over the course of 2024. First quarter international government revenue grew 33% year over year and declined 9% sequentially to $79 million as a result of the revenue catch-up in Q4 that we noted last quarter and continued headwinds in Europe. First quarter TCV booked was $904 million, up 128% year over year. Net dollar retention was 111%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the first quarter with $4.1 billion in total remaining deal value, an increase of 22% year over year and 6% sequentially, and $1.3 billion in remaining performance obligations, an increase of 39% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $226 million, representing an adjusted operating margin of 36% and marking the sixth consecutive quarter of expanding adjusted operating margins. Q1 adjusted expense was $408 million, up 2% sequentially and 2% year over year. Turning to the balance of the year, given our conviction in the U.S. business, coupled with our margin expansion, we intend to boost investment in resources in the U.S., including in AIP and specific defense opportunities. While we expect expenses to ramp starting in Q2 through the back half of the year, we remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and GAAP operating income. In the first quarter, we generated GAAP operating income of $81 million, representing a 13% margin, our fifth consecutive quarter of GAAP operating income and fourth consecutive quarter of expanding GAAP operating margins. We generated first quarter GAAP net income of $106 million, representing a 17% margin, our sixth consecutive quarter of GAAP profitability. First quarter adjusted earnings per share was 8 cents and GAAP earnings per share was 4 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 57% in the first quarter, a 3-point increase to our Rule of 40 score from the prior quarter. We will continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the first quarter, we generated $130 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 20 and 23% respectively. In Q1, we also repurchased approximately 500,000 shares as part of our share repurchase program. As of the end of the quarter, we have approximately $990 million remaining of the original authorization. We ended the quarter with $3.9 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q2 2024, we expect revenue of between $649 and $653 million, and adjusted income from operations of between $209 and $213 million. For full year 2024, we are raising our revenue guidance to between $2.677 and $2.689 billion. We are raising our U.S. commercial revenue guidance to an excess of $661 million, representing a growth rate of at least 45%. We are raising our adjusted income from operations guidance to between $868 and $880 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our Q1 earnings. I think it is fair to say we crushed Q1 in the US.
Facts.
We are on fire. You see this in our rule of 7, rule of 40 being 57. You see it in the 68% growth in US commercial. If you do apples to apples, following on 70% growth last quarter, or 71% if you do apples to apples, taking out a SPAC revenue.
Facts.
You see it in the deal growth in the US, growing from 70 to 136 in a year. You see it in the general enthusiasm around our products, especially in commercial, but also in government, which has begun to reaccelerate. You see it in general in our customer growth in US Comm, which grew 69%. And again, we are growing these numbers while maintaining a rule of 40 score of 57, which basically means we're doing the impossible. We are growing the company while investing in our
I said
core
facts,
IP, or our
not
software
swear.
development. We are winning in the US. And then that kind of then leads to the question of, why are we doing so well in the United States of America? And the main reason is we built software infrastructure that allows enterprises, both commercial and government, to move beyond chat, move beyond self-pleasuring, to actually produce things that are valuable. And whether this is tasking satellites in the commercial context, or changing margins, or changing American workers into Japanese engineers using our software platform and large language models, I believe we are the only company in America, the only really relevant market, that will allow you to do useful things with large language models. And that is what's generating 68% growth in US Comm, again, with a nascent sales force, doing it in a way that is not kind of playbook specific, thin technology. It barely works, and you have a sales force, but with 10 years of IP that presupposed LLMs before LLMs existed. You see the same thing in the government. Shyam and others will talk about it, but our mission footprint, whether it's in Ukraine, Israel, or in the United States government, is stunning. There is basically no conflict in the world that is not that where Western allies are involved and the battlefield's involved and the stakes are life and death, where Palantir is not the first call. And our ability to do this going forward is going to be even stronger because of past investments, and also the unity of our culture and the strength of our leadership, and in general, 20 years of understanding how to do this. It is true that it is mystifying to people, including analysts, how could this possibly be working? But it is working. And this is the 6th quarter of profitability, I dare remind people that there was a time when no one thought we'd be profitable, when no one thought we could crack commercial, where revenue per person was called into question. That also grew roughly 26% year on year. Revenue per person generated at Palantir. We do have headwinds in Europe. 16% of our business in Europe. Europe is gliding towards 0% GDP growth over the next couple of years. That is a problem for us. There is no easy remedy for that. It is also the case, though, that US Comm surpassed US European commercial, and we see that as favorable. I, in general, think this is just Palantir's time. Now, there are lots of questions about why we are so active in defending the values of the West. Our belief that the West is a superior way to live, and our ways of organizing around that, are the reason why our products are transformative, the reason why we have the best people in the world, the reason why a Palantir degree, as it were, is much more valuable than an Ivy League degree. Before the Ivy Leagues even, embraced the thin, new, woke religion, otherwise viewed as an intellectual cause, but in fact is a way of organizing things so that the greatest institutions of our time disappear and turn into discriminatory dysfunction. Palantir is a counterexample, and I'm super proud of the results. We are going to continue to execute especially in the U.S. And I'm very happy to have you on the call.
Thanks, Alex. We'll now turn to questions. We received a few questions from our shareholders about AI and competitiveness. Matthew and Ryan ask, how does your AI strategy differ from your competitors?
Well, we're executing our strategy at an unrelenting pace here. If you go back to the launch of AIP, I discussed how we thought the models were going to commoditize, and that's really borne out. We see that underscored with Llama 3 70B being released now. But the real opportunity for us, as Alex made mention of, is that people are using LLMs incorrectly in the enterprise. And as far as I can tell, we're really the only company to figure it out how to help our customers get beyond chat, leveraging the investments that we've made in ontology, really harnessing this pattern of implementation where you're taking unstructured inputs and turning them into structured actions and outputs that drive economic value in the enterprise. Now, there's this thing that some companies have started saying where only 10% of my customers have data that's even AI ready to begin with. I think that's completely wrong. Maybe they don't have something to sell in the present moments or they're trying to sell the past, but if that was right, how is it that in a single day boot camp, we're able to add value on top of our customers' messy extant data? Ultimately, software that works. And to the present moment, I'm focused on helping enable builders in the context of the enterprise. I made mention of the DoD hackathon, where a single user built an AIP logic function, surfaced in Gaia Assist, that took a targeting process down from 6 hours to 10 seconds. More generally, in commercial, with Build with AIP, we are releasing a slew of tutorials, quick starts, and reference implementations. They're going to help turn every customer, every user into a builder to unlock the potential of what they can harness on top of AIP. And that's the way ahead, and that's why we're still ahead.
And I would say, I don't believe we have competitors. So I don't believe in the U.S. commercial market we have competition. I don't believe in the U.S. government market we have competition. I think that's the reason Ukraine and Israel bought our product. We are differentiated because in order to actually make AI work, you need an ontology. No one has an ontology. To Shyam's point, you have a lot of people running around saying the data isn't ready. Of course not ready because they don't have Foundry. If you have Foundry and the ontology, it is ready. If you have Foundry, our ontology and Apollo, you can actually work at the edge. If you don't, you can't. And outside of America, we would still have to convince people of this. Inside of America, we're not really convincing people that we have the only thing that works. We're showing up, we're showing it working, and we're saying this is what it costs, and it's working really well. But I currently don't believe we have competition. We have a lot of people who are like the Palantir of Iowa or the Palantir of Harvard or the Palantir of Uruguay, but they're not Palantir. And it's going to take a long time to actually build what we have because you'd have to actually understand what is special about the software infrastructure of having the combination of Apollo, Foundry, and the ontology. And then you would have to build on top of it so that you can actually do these handoff functions with large language models. And luckily for us, there is not a consensus at the investor level, VC level, or among analysts that we have the only thing that works and that means there's just going to be very little investment in copying and doing what we do. And investment in what we do outside of America would be hard to do anyway, because the ecosystem, a term I don't particularly like, to get this done is in America. So you would have to do this in Silicon Valley, and Silicon Valley is focused on, to Shyam's point, the wrong things.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thanks.
We love them.
So good, great quarter. My question is, can you just talk about what conversion looks like from boot camps and maybe just double click on a typical customer? What's now that you have more and more data points, what's that showing you about conversion from a boot camp to actually signing a deal?
Yeah, absolutely. I can talk through that. So we announced boot camps 2 quarters ago as a go-to-market motion, and we're seeing that play out as you see that in the results. So in 1 to 5 days with the boot camp, we're able to do what used to take 3 months. And we're seeing, as I talked about, we're seeing customers, shortly after boot camp sign 7-figure deals. And we're seeing, the ability to be able to show them what they can do on the platform with real data much more quickly, and then have that monetization conversation much sooner. And so then you see that in the result, 69% growth in customers in US commercial. We closed 136 deals in Q1 this year compared to 70 deals in Q1 last year in US commercial. That's a 94% year over year increase. And so we're seeing, it's still early in the process, and we're seeing the results from the boot camps and seeing that they're working in the monetization from them.
The boot camps also have, quite frankly, another massive advantage, because de facto it sets a standard that will be very hard for any other company to meet. So even if you don't buy our product, you de facto have locked in an idea of what's possible. And that means that at some point when you go try your own thing and it fails, you've seen, okay, well, I've seen the art of the possible, and therefore I'm going to go buy it from Palantir at some point in the future. The boot camp motion is an early motion, and I don't think we would say we've cracked the sales motion. In fact, I think our 68% or 94% growth on deals, or 69% on customer, you have to look at this as we are at the way early days of figuring out how to actually get customers to buy our product. We are good at educating customers on what is the art of the possible, and then some portion of those customers buy it. So I expect as we get better and better at that, our numbers will increase. But it is really early days. We're not flawlessly executing on our sales motion. And I would say I saw this when we built our anti-terror platform. One of the most important things we did is go out and educate the world about how you could fight terror and maintain civil liberties. And most people we actually offered our platform to did not buy the product year one, but by year 5, they'd all bought it. And they bought it because they're like, okay, well, we see how you could integrate data across disparate data sets, maintain a security model, fight terrorism, and be in conformity with the law. And even if you say, oh, I'm going to go try to do this myself, in fact, you can't. And then that sales motion, so the relevant integral for this is not just what you close in quarter. It's like, it is kind of throwing a carpet on the whole market and saying, okay, well, this is the standard. If you can do better than this, buy it yourself, build it yourself, acquire it from other people. And if you can't, come back to us, we're here. And that worked very, very well. I mean, almost every country in the world, not every country, but almost every country in the world that could buy our core anti-terror product at some point did.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So it's also in the line of implementation, but less about the customer, because I think the demand you are seeing is unprecedented, and we can see that you're seeing that on both sides, like from the government side and the commercial side. What I'm really curious about is if you can give us some color around what is next in terms of actually tackling this demand and implementing the efforts and supporting a way larger customer base. What is hiring? What is partnerships? What is next there? And what is the most challenging from your point of view?
Well, I can certainly take that. Maybe Ryan will have some comments on the partnership side and the growth of that ecosystem. But on the product side, this is one of the reasons I'm most excited about Build with AIP and the boot camps that we're running after we have deals with customers. We're really igniting a movement within the customer in terms of unleashing their builders and tackling use cases. There's been a shift. Like, we still love to work on our customers' hardest problems and most important use cases to deliver crushing value very quickly. But concomitant with that is, how do we enable every single one of their builders to get going? And I can think of the most recent, say, 2 quarters, our ability to come in there, help them solve one problem, but ignite hundreds of use cases that they're able to do on their own. So really, even without needing additional partners, leveraging repeatable reference implementations, reference architectures, quick starts, tutorials that get them going again. And across different, we have these for all the industries that we're working in, for all the functions within these customers, and including in government itself.
And on the partnership front, you see, we announced our partnership with Oracle. We're seeing hyperscalers that are realizing that in order to drive compute, you need to move beyond chat, right? You need a solution that's taking organizations beyond for their AI strategy beyond chat. We're seeing that happen there, and we're expanding, the partnerships across the space with partners implementing at our customers as well.
We have across our company for the first time ongoing discussions with hyperscalers that are well known and with others, where we're basically saying, look, we have the ideal product, you have the ideal distribution, you can build on top of our product and then capture your distribution at a higher margin. We are having discussions like this in Japan across UHG, but we have our efforts to provide our core infrastructure to defense tech startups, which are going very well, simultaneously allow us to expand our core architecture, core software development into the DoD, but also make us less competitive with people, which helps us a lot. So a lot of what slows us down is people pretending they're competing with us. So finding ways to build partnerships with those people so they don't compete accelerates our revenue. And in US Com, it's a lot of what Sham is saying. It's we are allowing customers to do what we had to do in the past, which is supply Palantir software engineers. There are just not that many Palantirians, so we can't scale. We have to allow other and encourage and provide a platform where they can do it. And I would say what you see both on AIP and on Foundry is de facto customers using our product pretty much on their own. And that's again why that you see a revenue growth up to 26% compared to last year on per person revenue, because we're making more money with the same number of people, roughly. So, and that's precisely because of these things that we're doing. And so that has a lot of benefits for us, both alignment and quality of revenue. That's why you have this that's why we have 57 on the rule of 40. That's why our revenue is growing per person. That's why we can get away with sales that are not perfect. And we're thinking a lot about how to do that.
Thank you. Turning back to a question from our shareholders, a lot of people have noticed that Palantir is pretty outspoken when it comes to geopolitics. How has this been received?
Well, it's a complicated question because I think internally, I mean, there have been people who've disagreed. There have been people who've disagreed to the point where they've left, and this has gone on over the last 20 years. When we refused to walk away from special forces, the U.S. Army, when we took over Maven, when we refused to stop working with Homeland Security, when we had discussions about which countries we'd work with and which countries we wouldn't. More lately, in a more timely version, when we supported Ukraine, it was less controversial. When we sold Israel our software, that was arguably more controversial. The fact that I take, I think the central risk to Palantir and America and the world is a regressive way of thinking that is corrupting and corroding our institutions, that calls itself progressive, but actually, and is called woke, but is actually a form of a thin pagan religion. That is a real danger to our society. And it is a real danger to Palantir if we don't discuss these things. The reason we have by far the best product offering in the world is because we have by far the best alignment around how to build software, what it means to build software, full alignment with our customers, a view that the Western way of living is superior and therefore it should be supported by the best products. People at this table have been in the trenches for over a decade each. Why do they stay? Why do they fight? Why do we come and do these calls? Why are we fighting for individual investors? Why do we actually care about revenue growth in quarter? I mean, honestly, everyone at this table has a lot of money. It's like we care and we fight for these things because we believe we are fighting for a stronger, better, less discriminatory, wealthier, more open, and better society by providing the friends of the West, U.S. industry, U.S. government, our allies, with by far superior products. And that's, by the way, and that's how we align with our customers. By the way, I have customers who disagree with me, but they sure as hell know I'm telling them the truth about what we believe. And probably more importantly, they know we're not sophists. They know we believe in things. And that's why we fight for this culture. And that's why we fight for our products. And that's why our products are growing. Again, you can repeat all these numbers over and over again. How do you get 68% growth in US Com with the 57 rule of 40? How do you nearly double your customer count, your deal count, your customer count, all these numbers? You do it by having full alignment and the best products in the world. Or you can do it by having weird things that barely work and trying to manipulate clients into buying your product until they realize it barely works because it's thin and of no value. And that's just not how we roll at Palantir. So it has been really, and by the way, on the last note, how do we have the best investors in the world, especially individual investors? Why do they stick with us when times were hard? Why do they fight for Palantir? Why do they, every time someone writes something inane, Palantir's gone MAGA, Palantir's doesn't have a product, Palantir doesn't have margins. I'm sure this quarter, Palantir's growth is decelerating despite the fact we're obviously crushing it in America. Palantir is too crazy. Palantir will never be profitable. Palantir can't IPO. Palantir is too weird and odd to produce something that will be disruptive. We knew it was bullshit. The people who out on the front fighting against that BS, fighting against lazy, inept, discriminatory in the sense that is ignorance, people maligning Palantir, do it in great part because they believe that we are fighting for them, and we are. And we're fighting for ourselves. And that's why we have such a great company.
I love that.
So thank you.
Thank you. That concludes Q&A for today's call.
He's a boss. He's a boss. He's a boss, bro.
They were short and concise on this one. They,
yeah,
they just kept it to the point.
So, Dom, I'll go to you first. Your thoughts about the call, and then we'll take some technical analysis from Greg about what's going on.
Yeah, I mean, I thought they hit on all the high points. I was hoping they were going to answer some of those other interesting retail questions or entertain them. But love the DoD.
Good thing we did.
Huh?
Good thing we tackled those questions because I told you they'll avoid them.
I didn't see the 26% revenue per employee one on the slide, so that was nice to learn. They kept talking about the expansion and how certain things aren't factored into their NDR. So I think we can expect their NDR percentage to continue to accelerate as those new customers become customers. And I'm really interested to see more about what they write about Edge X, the infrastructure new product that they have for government. And then they didn't even make a big deal publicly about what that 10-year deal was with Cleveland Clinic. So I'm curious as to, that must have been a very lucrative deal to do a 10-year contract. I'm sure we'll start seeing similar things with HCA and other healthcare organizations.
Yeah. For me, I pulled up the chart so you guys can see, like, not the chart, the stock price action. I don't really follow it. To me, it's very simple. They've beat revenue. They've beat EPS. They've improved adjusted operating margin. They've improved the net dollar retention, which I wanted them to improve. They've improved the customer count significantly. And they've raised their guidance. So they've checked all my boxes. And I think overall it's a terrific quarter. When Dan said it, I couldn't agree more. So for me, I'm a happy camper as a long-term investor. But Greg, moving to you, and I'm going to pull up your chart here. What's going on the technicals, on the short term? What are you seeing?
Actually, rather tame. Usually, the market reacts far more negatively when Alex speaks, especially certain keywords that he said. I was actually a bit worried. I do like the overall numbers, of course. Everything that was mentioned, to everything from profitability to net dollar retention to saturation in the sector. All of it is wonderful and great. The market is not buying it. At least for now. Again, we have to wait for tomorrow and see. But for right now, the signs, and remember, though, the key players who matter can play right now. It's not like, well, they can't. No, they can. So this is happening for a reason. When something happens, we say it's happening for a reason, or rather, when something doesn't happen, it's happening or not happening for a reason as well. This is not looking great in terms of the stock price, but we said this before, the stock price can be completely unhinged from what the asset value truly is, how well they're doing. And in this case, I think it's completely would be very accurate to say it has a lot more to do with macroeconomics, or just with the overall market conditions.
But Greg, can I ask you a follow-up?
Yes.
So we were $22 on May 1st, right? Or April 30th. So a week ago we were 22. We're currently at 23.5. Overall, I think it's net positive, right? You went by $1.50 on a $22 stock. I haven't done the calculation of how much we're up, but I would say it's just normal correction, isn't it?
Yes, for right now. Again, it's nothing out of the ordinary, but for such results, you would expect better outcome. Yes. So the lack of movement is a sign within itself, and we're not even.
Yeah, I just calculated 7%. We're 7% up over the past week.
it was about 7. If we're looking since, if we
Yeah.
want to measure since the 16s, I mean, you see, it's a bad calculation. Nobody will be truly calculating and hoping you're a sniper and you entered perfectly, right? Even if we adjust it for mistake, or you waiting for confirmation, right? You would have been 1 second. I mean, and again, let's say you're not out at the peak, you're easily 50% up.
Yeah.
No matter
that's
what,
fair.
the market, the channel right now seems this way. Well, it's rotating the channel upwards, but this is short term, and the problem is people often too focused on the daily charts and don't notice the overall picture. If you're looking at the overall picture, we're not doing anything we're supposed to be doing right now. We're actually retaining the same sort of range. Not exciting. Again, with these results, you want to be seeing a lot more exuberance from the market. We're not seeing this. Rather weak, rather tame. Tomorrow we might retest some of the levels we've done today, but at the end of the day, I stick by my $20 retesting thesis, and then onwards as the market will see more troubles as we go towards the 16s. And it has nothing to do with Palantir itself. Palantir is amazing. It will become a staple. It's one of
No,
those
you're just
things.
talking short-term technicals. I understand. Great.
Yeah, it has nothing to do with how great the company is.
Okay. So, folks, we've been on for I've lost track.
2
How long have we
hours
been
and
on?
40 minutes.
Yeah, that's a long ass.
That's a
time.
long time.
If you want to show us thanks, do not send us money. Don't send us super chats. Go and follow Dom on X. Dom, can I show your X profile here real quick?
Yeah, go for it. It's fine.
So what's your handle? And I'll put it on the screen.
Dominic Rinaldi 9.
You could
Original.
have made it more.
There's 8
No,
other
you're
Dominic
kidding.
Rinaldis that beat me to it.
Wait, it's so complicated. Hold on. Wait. I have to. You've convoluted the craziest Twitter handle. Can you put it in the chat and I'll just highlight it?
You don't know how to spell my name? My
No,
feelings are hurt.
I don't want to make a mistake. Hold on.
Yeah, don't
Just
put a QUE on
put
that.
the handle.
Yeah, I got it.
Okay,
you go.
so what I wanted to ask you folks, this is that's a complicated ass handle, bro. So this is Dom's handle on X, and also follow him on Seeking Alpha. He literally posts some of the most. The alpha is there. Literally, the alpha is there in these articles. He called NVIDIA early. He called Palantir very, very early. So read his stuff on Seeking Alpha. Follow him on X. He may not have the largest audience, but he knows what he's talking about, and he's absolutely experienced. Comes from the industry and knows what he's talking about. Only problem, as I mentioned before, is Cowboys fan, but it is what it is. Greg, do you mind sharing your channel?
Yes, of course. It's
And
I
then,
dropped it in the chat a couple of times. Here it is.
If you pull it up on the screen, I'm going to show it on the screen for the folks in the chat.
I can try and do that. Give me a sec.
Yeah, instead of your chart, just go to your channel, and then I'm going to pull it up.
Yeah.
Dom, do you still post on your YouTube channel?
Nah, I just the amount of time I just haven't had to have the
Bro,
ability
the
to
Seeking
to
Alpha
balance.
articles you write probably take weeks. Those are
No,
complicated.
I can normally pop those out in a day or two. I definitely do a lot. The hours of research is what takes the time. But yeah, no, I would say just to conclude here. First off, thank you for having me on. I love doing this. We'll do it again.
No,
in
thank you for
Q2.
coming on. I mean, you've co-hosted with Greg, and it's been you guys have killed it.
And I love getting the technical education from Greg.
Greg is a
think
stud.
The biggest
technical.
thing to take away is everything is moving along the thesis, and the stock or the company itself and the business model is still misunderstood by institutional investors, which is a good thing for us, for those who are DCing a dollar cost averaging for the long term. Interesting thing to end on with the hyperscaler conversations. He's exactly right. If they can actually help the hyperscalers like AWS and Azure understand that Palantir Foundry can drive compute, that's literally, we were asking and talking about that exact conversation about 30 minutes ago. So,
yep.
be really interesting to see if they keep driving that forward. We are definitely still in early days. So overall, I thought it was a great call.
Greg, scroll please all the way up to your channel so they can see the name of the channel. So the channel is called Investory. This is the channel. Go give Greg a follow if you like technical analysis. I think Greg is one of the best. Again, not a huge following, but he knows what he's talking about. And I want to thank both of you for coming on here for almost 3 hours and doing this with me. It really made it so much more fun and so much more professional. I think the entire chat, if you guys can drop a big thank you for Dom and Greg, I'd really appreciate it. And if you want to really thank them, go follow them on Greg on YouTube and Dom on X. And yeah, just in my mind, great quarter. Stock is taking a little bit of a breather, and that's fine. And tomorrow is a new day, and everything will be okay. That's the most important part. And we'll see you guys in the next one.
Thank you for inviting me. Bye bye, Tom.
Yeah. Later.